Wake up, Droog. It's over. You didn't think it would always be that easy, did you? The new normal is ultra-volatile. Look around and get used to it. What do you mean you don't like this market? This is your new passion, remember? The future of finance? You wouldn't just leave us because the prices have changed, would you? What goes up must come down. Search interest for Dogecoin was greater than for Ethereum at several points in the last market cycle. But now retail is gone, and even insiders have little interest in your futuristic financial primitives. Meme stock mania drives short-term trends, where the prices change as quickly as the content. The list of the largest cryptocurrencies shows how irrational these markets are. Even now, after the total crypto market cap has fallen by 2/3, meme coins and vaporware are still valued higher than many of the projects of hard-working teams and real working products. But speculation is a feature, not a bug, for most crypto users. And if DeFi has fallen out of fashion and fundamentals are no longer fun, embracing the extreme seems like a natural consequence. Who's to blame the dog token buyers or the JPEG enthusiasts for their belated attempts at trying to get rich quick? When we look back on the latest cycle of boom and bust, we'll see that the real sign of the times was the immaturity of the markets, which were so easily influenced by the actions of idolized individuals. It seems unquestionable that a major cycle has just finished, but if venture activity is still on the rise, then how long can macro conditions suppress the crypto markets? Smart money is still making big moves. Don't let the thought leaders sway your conviction. If the merge and the macro didn't prepare you for a bit of the old ultra volatility, then what did you think was going to happen? If you're down so bad that some hopium is needed, then just look at where we've come from and look towards where we are going. The markets may have tanked, but the fundamentals and the long-term opportunities remain the same. Many come here thinking the market will make them get rich quick, but those who entered during the recent hype cycle now face a choice: give up and sell at a loss, or educate themselves and build their positions for the future. These markets are maturing, not dying. The world has been forced to consider the consequences of crypto, not just for currency, but for art and culture as well. There's too much momentum to slow down now, too much at stake, and for too many. Crypto will remain a volatile market for a long time to come, and we will have to fight through the aggressive regulation. But there's no stopping what we've started. The market will recover. There will be another cycle, and we will see that it was all, in retrospect, inevitable.
Oh my god. Sorry guys, I wanted to start the stream with that. I saw it. It's by Wrecked News on YouTube. They're in the video description below. It just seemed too on point. I don't know. Hopefully you guys didn't hate it. I really like it. Check them out. They make awesome kind of crypto content. Very different from what we do. But let's get into it, guys. I'm so hyped to be here. It is the day of Chirpow. And we have 800 people viewing. We're 3 minutes in with 800 viewers. You guys are awesome. Smash the likes and subscribes. Today is going to be insane. We have an FOMC meeting and we have a visiting from our favorite Chirpow and hopefully Gina, fingers crossed. We're expecting some ultra volatility. I can barely speak. I'm so excited, man. We haven't had enough of these lately. They've gotten off of their monthly meeting schedule, and now they seemingly are kind of doing them randomly. I don't really get it. Whatever. Let me know how you guys thought about, or what you thought about that intro video in the live chat. I'm going to be reading it. Stay hyped. Stay hyped today. We've got a little bit of time before the actual decision comes out, and we're going to be here live for it. So today, the schedule, we're going to have a little intro. You can see behind me, these are the previous and future FOMC meetings to come. I even labeled what interest rate hikes they have here. Let's start out real quick. What is the Fed? They're the Federal Reserve. What is their goal? Their goal is to control inflation and unemployment. These are the dual mandate, I believe. I keep saying this, and I just don't know why. I'm like, don't really understand or believe it. Also, like minority fairness in employment. So maybe a tri-mandate. But their main goals is essentially to regulate the monetary system. We've seen them do this all year with these interest rate hikes. While these interest rate hikes don't directly impact our everyday lives, and they mostly directly impact the rate at which banks lend each other money or the Federal Reserve lends them money, essentially, to put in layman's terms, they impact the global economy. As the dollar is the global reserve currency, many nations have their debts in dollars, despite having their own native currencies. This has huge impacts. When this goes up, we have seen over the course of this year, not just for Bitcoin, not just for crypto, but markets everywhere react to this. So maybe the impact isn't direct, but certainly, the impact is real and undeniable. 1,000 viewers. Guys, hype the likes. We're going to get 420 likes in like the first 10 minutes. Let's go. Shout out to our sponsors, Bybit, Market Cipher, BingX in the video description below. Use their links to sign up, help support the channel. Shills out of the way. Make sure you're liking and subscribing. Let's pull this up. This is from, I don't even remember what the source is now. Essentially showing us kind of what was going on at each one of these and maybe the reasoning behind it. So in January, rates were effectively zero. In March, the Fed started talking about inflation. Remember, guys, it's transitory. Or I think back then, inflation wasn't real still. Then it became transitory. But that was where the first 25 BPS hike came into play in May. A lot has happened this year, right? In May, we had a 75 BPS off of the Russian invasion of Ukraine and China bringing back COVID-19 lockdowns. We continued with these 75 BPS hikes into June as inflation reached a 40-year high. In July, inflation continued to grow, clearly setting a new 40-year high. And in September, inflation was still impacting Americans, and thus we saw another 45 BPS hike. So, in just an hour, not even an hour, we will have the decision for November. In just over an hour, we'll have Mr. Chairman Powell himself speak. We're going to be here. I can't freaking wait. This is now my favorite thing every month. This is like my favorite thing we do. This is it. Lots of other channels have started doing it. I don't blame them, but we made this cool, guys. We've been doing this for 2 years. They weren't cool. With your help, we've made them cool. So let's get into the noise, right? Let's get into it. I kind of also wanted to look over really quick. I have these marked here, and I have the timings marked. So I wanted to go back just really briefly and kind of look at what was going on during these. So in the 25 BPS hike, markets not super affected earlier in this year, kind of continued an uptrend. This is just Bitcoin, but in general, markets weren't super impacted by this. Into the next, in May, we can see that this 75 BPS hike may be a little bit more impactful. Good amounts of selling afterwards. If we zoom in really close, let's see if I can find it. Nope, that goofed me up. Let's go back. That goofed it. The next one in June, 75 BPS hike, kind of the same thing. But what's really important, and this is why I marked these, is the volatility. And that's why I wanted to show that video today, the ultra volatile. We have seen these meetings mark extreme volatility events in markets across the board. Boom. Especially as their 75 BPS hikes came in, the 25 wasn't so impactful. The next one, man. Weirdly, I don't remember this. July. Man, too many of these. We saw lots of volatility, but it was to the upside. I think that was short-lived. Looks like it. Yep. You know, this wasn't as interesting as I wanted or as I expected. So let's zoom back into today. What we've seen is into these meetings, and specifically about the hour before things get crazy. That's why we like to go live before they start. You can see we are approaching our Chairman Powell line here at 2:30 East. At 2 p.m. East, we are going to do as we always do. We're going to crowdsource looking for the interest rate decision. For some reason, the Fed publishes these to like news sources before they publish it. I don't know. It seems weird. But we Google together and we find it. When this happens, guys, I want you guys to get your Google tabs open. Google it up. I want to see not just the BPS decision, but I want to see a source. I want to see a credible source. Please don't just put a number in the chat when it's 2 p.m. and this has come out. We like to get the real info. It has to be something that was published within, after 2 p.m. Can't be before then. They don't have that info. So, Bitcoin into this meeting. 20,003 up to 20,005. Not that crazy, right? That's like a few percent move, not even 0.8%. But we can see the volatility starting to simmer as we approach. This is pretty predictable. I do want to warn you guys, what we have seen in the past, and this was really unfortunately on point last time, is we do tend to see Bitcoin and other assets kind of rally in the wrong direction. So if Bitcoin continues up into this decision, usually we see it reverse course. Maybe this time we break that pattern. But we've seen it pretty predictably, and it's not just on Bitcoin. It is on the dollar, on other assets as well. I think I'm getting ahead of myself. So the rate decision today will be coming in hot. We have a poll at the top of the chat. 64% with over 1,000 votes looking for a 75 BPS hike, and I'm going to argue that you're probably correct. Markets now at a 92% confidence. Let's refresh this to see if this has changed. It has. All right, as we're growing closer to this meeting, we're actually seeing the 75% 75 BPS confidence drop. That was sitting above 92% before the stream. You can see here, this is the Fed tool monitor on investing.com. This isn't guaranteed, but this has been very on point. This has been very on point going into these. Has dropped to 89.2, a 50 BPS hike, gaining a little bit of favor here as we draw closer. I'm going to do a little breakdown for you. 75 is likely what is going to happen. Is what it is. That's what they've been talking about all month, actually for more than a month. We have speculated of a pivot. We have speculated of even just anything outside of the expected, and it has not happened. These interest rate hikes have been scheduled, and they have really played the way that they've set it out. I do expect this to eventually not be true. I do expect the Fed to eventually pivot. Will that happen today? We don't know. I don't think that that's super likely. What I think is going to happen today is we get 75 BPS. That's going to be a very neutral, but I'll say with a slight lean bullish, very slight, not significant. Because the markets are getting what they expected, they've likely already priced this in. It's not a surprise. There is the, 10% chance that we get a surprise. That surprise could be a dovish 50 BPS, which likely will send markets skyrocketing. I don't think this is very probable, but that would send most markets skyrocketing, at least in the short term. And on the other side of that coin, higher than 75 BPS, could be in play as well at 100 BPS hike. That would likely send markets plummeting. So we'll see. We'll see what happens as we always do. What's going to be valuable today, though, is not so much this BPS hike, as I think it's all but locked in at 75. What's going to be very valuable is the words, the body language, and the forward guidance, though the Fed has pretty much killed forward guidance in my opinion. The forward guidance is going to be extremely valuable because while this month might be decided, we are moving into the end of the year, and we have heard talks from them speaking of more dovish hikes coming in the future. So the next one, not smooth. There we go. The next one is December 14th. We will be live here for it, of course. We will be live here for it, but December 14th, we are somewhat expecting 50 BPS on this hike and a few hikes going forward. So what Chairman Powell says about that is going to be more impactful, in my opinion, on the markets than what they say today during this meeting, because, as I said, pretty much the markets are accepting it's 75. Time will tell, but that forward guidance is going to be very important, more so than usual, and that's going to be hella spicy. So Bitcoin moving into Chairman Powell. We're up, but we're still pretty much in the range we've been in the last 2 days. Not so much excitement. Let's look at the dollar. So before the live stream, this is the dollar, the Dixie. Before the live stream, the dollar actually was roughly at where it had opened on the daily. We can see a little downside trading, wicked back up. And actually, as we've drawn closer, the dollar turning green. Now, this is more of a hammer candle. This could be a more bullish candle than we were looking at before we went live. Let's actually mark on here when this happens as well. Wait, 1, 2, do like that. 2, there we are. I might get rid of this. Oop, there we are. So we're drawing closer. The dollar also rallying. Interesting, not quite as a kind of exaggerated rally as Bitcoin right now, but the dollar moving up into this meeting. I mean, 75 BPS is going to be bullish for the Dixie. We've seen the dollar really chill out here over the last few days, or actually maybe the last month. Let's see. Last month. Let's look at that on the monthly. Yeah, October, kind of an indecision candle here, although I will admit the lows of September respected and the highs. So the dollar could be looking for some kind of flag here with its lows coming up, its highs coming down. A move up over the next month or two to about 115, I don't think would be crazy for the dollar. In fact, that's probably where I'm leaning at the moment. Let's see. Dollar looking bullish on short time frames. 1530 looking very good. Wow. The dollar stole our run, man. I don't dig it. Let's add our alerts, and we're gonna try to get through. We're gonna try to get through pretty much everything we can. We're 17 minutes in. Highly recommend, guys. I'm gonna say this again. Highly recommend no trade right now. Not financial advice. We don't give financial advice. I don't hold trades into these because, as we looked earlier, I did not the best job of showing it, but crazy volatility into these meetings. And that volatility is likely going to get you stopped, whether you're long or short. Highly recommend you just sit on your hands, wait to see what happens, and then you can look to take a position if you feel comfortable. Do I think... I see you guys are doing... I see you guys are doing a good job hyping the chat. What's up, Annie Booster? No live meeting. Oh, there will be. We're just live early to go over the charts. The meeting will be in a little bit, actually. We like to go over the charts, get a little bit of a sense of what the charts are telling us before it happens. You know how it is. What's up, Crypto Carnage? Cable Digital. I don't know what you're referring to. What's up, Matthew Miller, Alton, Daniel, Lord, S. Poppy, Ronan, Pickle, nice job. Mr. Sazo, R. Lake, who else is here? Crypto Surf, what's up, my man? BGAK, how you guys doing? What are you guys vibing on? We're still at 63%. 63% on our votes. Interesting, actually, that 37% of us are looking for something outside of a 75 BPS hike, which, if we look at the markets, if we look at kind of what the markets are expecting, that is not in line. Not in line. It's all good, though. Yo from Scotland. What's up, Scotland? Mr. Snacks. Dib Dab Bullish. Sean Coons. Crunk. You're all legends. Love the glasses. Thank you, Vim. Appreciate you. 100 BPS coming, says Rahul. Sell everything. I mean, if 100 BPS is coming, it's not the worst advice. That's going to be a huge shakeup in the market. I don't think that's very likely, though. I don't think it's very likely. Keep hyping the chat. You guys are doing awesome. Do we have 1,000 likes yet? Let's get 1,000 likes. What's up, Moon Boy? Crypto Crank. We're going to take a look at a few more charts here quick. Keep it, says Love G. What's up, Love G? Good to see you, man. Crude oil. Next up. Interesting. Crude oil made a nice run to resistance, but seemingly unable to find legs. It is painting. I am seeing definitely some kind of inverse head and shoulder pattern here. It looks like the neckline sitting at like 90 for crude. This is going to be one to watch today for sure. If we see moves on the dollar, would expect moves in crude as well. Let me pull on market CipherB here. I've gotten so used to using it. Crude kind of reflecting the same as the dollar, looking strong into this meeting. That's pretty spicy. Not super unusual to see crude and the dollar moving in the same direction. What's up from London? Enjoy your Fed day streams. Hello, London. Shout out to London. Mr. Techno Goody, my man. How you doing? I love that you're here all the time. Where's Crypto Steve-O? Where's he at? Someone get him in here. Alex asks, what's up, brah? Sweaty Dave. Sweaty Dave. Hexflex. Powell. Powell himself. Mr. Powell says... Powell, the money printer, says 200 BPS. Well, we got our answer. We can shut the stream down. It's over. We got our answer. Let's take a look at bonds. US 10 and US 2. These have been huge. Really the only thing in the green over, I don't know, the last 3 months has been bonds. Let's take a peek. Last week, 10-year chilled out. Let's see if the 2-year chilled out. Or the last 2 weeks, 2-year chilled out. Sitting at 4.5%. These are still inverted. The 10-year still lower than the 2-year, which is an inversion, typically a sign of recession. Not great for economies. It makes no sense for a 2-year yield or 2-year bond to be higher than a 10-year bond. Who wants to lock away their money for 10 years if they can make more money locking it away for 2? Nobody. Nobody. Alerts are set there. Let's move over to Forex. What's going on? We're going to take a peek at each of these individually quick. GBP. Was anyone here for this analysis on GBP? Because I did not catch this break. We were looking for rising lows with a flat top. GBP never actually lost parity. Looks like it's moved up past 114 and maybe back testing it now. Today going to be very important for the GBP. If the dollar starts running, GBP is likely to take a beating again. Even though it has this beautiful pattern, I'm bullish. I'm bullish to about 125 on the GBP here. This is what I'd like to see happen. The peso, the most stable of freaking currencies, it seems. The peso having kind of a nice week here. This is very flat, maybe the least volatile of the other currencies, but we can see 3 weeks now, peso is making a run for a 2020 high, it seems. Doing pretty good. Doing very good, actually. The Swedish krona, the SEK, breaking out of what I was looking for, a very bearish pattern. Seemingly, double topping-ish at 0.918. Kind of back testing maybe this resistance as support at 0.9. Interesting. This was looking like garbage. It wasn't price discovery at all-time lows. We were looking for our measured move down at 0.821. Time will tell. It's not quite there yet. We don't have enough time to do everything, so I got to do them quick. JPY, let's see. JPY relatively unchanged after falling the last 3 weeks. Really slow green candles, not a lot of bounce. The JPY, it's funny, JPY and GBP, so the UK and Japan both now essentially turning the money printers back on. The US continuing its tightening while the rest of the world unable to really hold pace with it. This is the main argument, in my opinion, for pivot, is that the Fed is really just destroying the rest of the world's economy. Just absolutely obliterating it. To the point where they're quantitative easing again. This is an argument for crypto, in my opinion. The US may not be printing, but if everyone else is printing, does it really matter? Not really. The CAD kind of similar here with a weak bounce. I don't see much. Still kind of expecting this move down. That would likely coincide, I would say, with a run up on the Dixie to 115. Wow. Chinese yuan, actually, the only one, interesting, the only one that's continued to sell off. We've seen everything else bounce here. The yuan continuing to sell off. Wow, reached 13.65. There's no bounce here, all blood, weird. All of this could mix up today. Let's take a look at stocks. SP 500. Not very good looking, is it? After hitting a lower low October, might have seen a lower high here in November. We're seeing more red. Weird. Not weird, but weird. All right. Not really the same vibe. Let's look back at Bitcoin quick. Nice little pop here on Bitcoin, right? Nice little green candle, only like 0.5%. If we look at the S&P 500, not really the same thing. I will say this does kind of look good though. It's like a descending channel, you can call it. You might even call it a wedge. You would look for this to break to the upside, but just don't have the signs of it yet. How did this close? Looks like it was October for stocks, not so much for Bitcoin. But for stocks, a little bit of an October with an 8% gain. Bitcoin basically, what? I don't even know what it did. It was not a big gain. 5%, huh? I guess just after all this red, it's really hard to accept a little green. Something we should acknowledge, though, is October did close a bullish engulf on the weekly, or on the monthly. That's the first time we've seen that since October. Weird. Bullish engulfed monthly, October 21. Bullish engulfed monthly, October 22. And none in between. Weird. Schweird. It's like a gold. Gold logically should be moving as inflation is still record hot. It's not. Gold fell below 1675 support. This is a multi-year support. It's still down there. Still chilling down there. Not looking so healthy. Not really responding to this FOMC meeting either. It's kind of chilling. Right now, it looks like every single market is just waiting for Mr. Powell to come out and give them some kind of sign. Ew, that's ugly. Every single market. NASDAQ a little bit weaker looking than S&P right now. DJI, actually, I think a little bit stronger looking than S&P. Not a lot of volatility. Almost everything is sideways going into this event. Kind of crazy. Kind of crazy. Let's zoom back in and see what's happening here. Bitcoin. This is definitely flagging. I don't really trust flags on Bitcoin, though. I don't see them predictably break the way that you would expect them to. But we definitely have our highs coming down and our lows coming up. Look at that flag. It looks like it's literally right into the decision. Wouldn't surprise me to see us just move sideways into it. Hello from South Africa. What's up, South Africa? 2,600 viewers. Pretty good, guys. I was hoping that we would break our record. I think last month we have 3,500. So we're pretty close, but we're not actually at the meeting yet. We have 30 minutes till the interest rate decision comes out. If you guys keep hyping the chat and the likes and the subscribes and you share it, we might be able to do it. Hello from Bulgaria. What's up, Bulgaria? Martin, how you doing, Martin Lapp? Shelly Walker, Fed Punch. Fed Punch. I like that, Fed Punch 75. Hello from Egypt. What's up, Egypt? Shout out to Egypt. Hey, my missus has tonsillitis and miserable. Help her out, Tom, by wishing her well. Lee Groves. I hope that your lady, Ms. Groves, Ms. Groves, I hope you're feeling better. I had tonsillitis once. I actually had my tonsils out. I feel that pain. It is not fun. I'm still recovering from, like, the Vegas flu. But I'm going hard because you gotta go hard today. What's up, Richard Ruggs, Neil, Harbat, BG, I already got you. James Ladesma. Shout out, boss, Tom. What's up, man? Snabuel. Kimonosas. Hello from Greece. Shout out to Greece. Oh man, we're getting everyone. Round the world shout outs today. Aesthetics. Chirp. Pow. Is a flag a continuation pattern or a reversal pattern? So, Lord Hegamonster, typically it's a continuation pattern, right? If you Google it, that's what Google will say. In Bitcoin and crypto, they don't seem to do it in the probability that they maybe in other markets we see or would expect in other markets. Really, I don't know. Flags in crypto tend to be like BARTs, in my opinion. Hopefully I'm wrong here. I would love to be proven wrong today. But in my experience, they don't predictably break in a direction. I don't know. I'm not sure. We'll find out. Here's a perfect example. Let me set alerts. Okay. India. Shout out to India. What's up, Glitch Protocol Layer? Armand. Make sure you guys, if you're not subscribed, make sure to subscribe. Make sure to like the stream, chat in the stream. Engagement counts. Engagement is not placebo. The more you engage with this stream, the more YouTube will show it to new eyes. And then the more likely we will be to break our 3,500 viewer record. I think we can do it. I think we can do it. Probably about 2 p.m. So in 30 minutes, that's where we'll aim for to break the record. What's up, M Stone? Yep, if you curse, YouTube will automatically hide your comments. It does do that. What's up, Rene Silva? 1,000 likes. Can we do it? What do I expect from the Fed? I expect 75 BPS. That's a pretty easy call. What is more important to me, though, is what they say about the next or upcoming FOMC meeting. So in December, in February of next year, we actually don't have one in January. What they say about those meetings is going to be way more important than what they say today about the interest rate hike. Very good odds it's just going to be 75 today. But what they say is going to be so compelling. If they hint towards a pivot, that will be wild. Wild. Markets will go nuts. If they hint towards, well, we aren't done, we need to get more aggressive, markets will dump. It'll be wild in the other direction. Hello from Kashmir. Bullish on Litecoin. Oh, we pull up Litecoin, don't you worry. Let me close some of these charts so my computer doesn't crash. Keep gold open, keep this open, keep our forexes open. Don't care about bonds as much. We'll keep crude open, dollar open. There we go. Yeah, Litecoin's had quite a day. I don't want to get too much Litecoin, but you know, I'll take any opportunity to celebrate Litecoin. Hello from Portsmouth, UK. Hello, UK. Zero is coming, says Sloth Bear. Zero is an irrational number for markets to trade at, because in order for zero to happen, people have to sell an asset at zero. Why would anyone sell an asset at zero unless it has a cost to hold, right? The answer is you wouldn't. As soon as I look at Litecoin, Bitcoin moves. Boop, just broke out of the wedge. Actually, it's not that spicy. I like this though. Like I said earlier, I don't want to see Bitcoin just rally into this because we've seen that before, and when that happens, we usually see it retrace as soon as the interest rate decision comes out. So I would kind of like this to happen. I would like to see a low touch, then have it come out, and then see it rally. That'd be my ideal setup. All right, I reset my alert. Litecoin's having quite a day, guys. I know not that many of you are interested in Litecoin. This is my baby. I love Litecoin. You don't have to. You're welcome to hate on it. I don't give a shit what you think about it, to be honest. People used to hate on me for Doge. Then I made tons of money on Doge, so we'll see. While this rally on Litecoin is awesome, right? I mean, I'm digging it. 10% in a day. I'm not excited yet. And the reason is because it's really rallied it just directly back to resistance at $60, $61. Sellers came in. We have $67 or $68 resistance above that. If we can break there, break our high from September, that would be spicy and get me very excited. For now, I think it's just chilling. Let's take a peek. Take a peek at what's happening here. Won't spend too much time. That's not looking bad, actually. Market Safe are leaning pretty bullish on the daily here. We can see this kind of fake out pop of momentum on Litecoin. All right. Momentum was waning, and it said, no, it's no longer waning. 3 weeks of gaining momentum. Higher low on red on money flow, negative money flow. That's good. Higher VWAP on the weekly. Momentum's rolling over. Actually, the weekly is looking kind of prime. The only problem is we can do all the TA in the world, and if the Fed comes at us with a curveball today, it's all pretty much thrown out the window, at least in the short term. Momentum, though, on the sell side, been waiting for months for Litecoin. Market Cipher on the monthly, we do have a green dot. Ooh. As VWAP comes up. I'll take it. I'm not going to get excited yet, but I'll take it. Let's see. 170. 140, probably 140. Let's look at our majors there. There's very little resistance. This is what does excite me about Litecoin. We're not there yet, though. What does excite me is above $68, there's very little resistance here, all the way up to about 110. So again, not there yet, but it's got the recipe. It's got the recipe for spice. This guy so pro, make it look so easy. 1 sec, bravo. Right on, Ash. Love you. Sheba, you love Litecoin. I love Litecoin. You're welcome to love whatever you want. Amsterdam, I would like to visit Amsterdam. So please have your country invite me to come. What's up with Mask? I have no idea, Peter. What's up, Mahadev? Carthago, chat's going real fast. So forgive me if I miss your chat. We have got, I'm going to set an alert on my phone. We've got about 20 minutes until the decision is live. So we're going to have to stay vigilant, stay hype. I'm going to set an alert on my phone so I don't miss it. One sec. It's 1:59. I'll have this alert go off. And 2:29 for when the speech starts. Right on. Chat's fire today. That's right, Sweaty Dave. How many likes do we have? Let's gift some memberships. We almost have 3,000 viewers. Right on. Keep it hype, guys. I'm gonna gift. So we have let's get 1,000 likes. We have 3,000 people watching. We only need 80. Just hit the like button right now if you haven't. Subscribe if you haven't. We're gonna get to 1,000 likes here, and I'm gonna gift. This is a good time filler. I'm gonna gift memberships to the channel. There we go. 1,000 likes. Bam. See, that's what happens when we work as a team. That's what happens when we work as a team. Well done. That was the fastest we've ever jumped up in likes. Okay. Let's do it to it. Let's gift these right now. You need to make sure you're subscribed and you've liked the live stream. Engage. Engage with the stream. YouTube says that the more you engage with the stream, the more likely you are to win the gift. It's just like Twitch gifting. I don't get to choose who gets them. You need to enable gift memberships for whatever reason. I don't know why. We have 3,000 viewing. Get hype. Keep hyping it. I'm going to gift these in just a second. Sometimes it takes a minute or two to go through. There we go. I'm going broke gifting these. I do have to pay. I technically get 30% back, right? But something like that. There we go. Hype, hype, hype. Do you win? I don't know, man. I don't know who wins. I know when you know. Sweaty Dave! Just plain crazy. David. They don't lie, man. YouTube does not lie. They're whoever engaged with the stream wins. And it's very much true. Did you win yet? Let's go, boys. Keep hyping. Keep liking. We have got... Man, everyone in the world needs to call me when I'm live, right? How do you know? It'll tell you. It'll announce it in the chat. Eventually, I guess. I don't know. Usually it does. What do we want to look at? We have 10 minutes to kill. What's up, Crypto SJ? I'm not familiar with Crypto SJ, but good to have you here, my friend. Who's Crypto SJ? This is Crypto SJ. I freaking dig the YouTube. I dig the YouTube banner, man. Pokemon Pride. Pokemon represent. Huh. Crypto SJ joining the chat. I don't think YouTube's ever served me your stuff, but I'll give you a subscribe and maybe they will. Maybe they will now. 3,150 viewers. Let's just keep it coming. Keep the hype coming, guys. Did it say who won did it tell you guys who won yet? I don't know. It says on my end who won. Loving the energy. That's right. The energy. We got to keep the energy up. Keep it up. Spammity, 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 spam. Wow. Where did that go? Did it say who won? I don't understand. Chat's moving so fast I can't even see it. I saw some of the names. I saw Sweaty Dave. Wait, was it Sweaty Dave? David won. I don't know, man. There's too much going on. Let's go. Let's go. If you have a membership, drop the Tom Crowns in the chat, man. Give you a shout out. Alata. Alata Fagina. Give everyone a laugh. I said it in a non-funny way. What do you win? Nothing, really. You just win the membership. Who won? If you won, let us know. The thing's gone. There's so much going on today. Keep smashing the likes and subscribes. Can you look at Elrond? We can look at Elrond. Let's close this poll. We have 3,000 votes on the poll. The numbers aren't changing. Let's close it. Let's add a new poll. All right, ready? With inflation at still record hot. Wait. Still hot. Have you gotten a raise at your work? Yes. More than inflation. yes, but less than inflation. Sorry, guys. I'm typing up the poll. This is going to be a good one. And then no WTF scam. There we go. There we go. New poll. Wedge is forming. Wedge is forming on BTC. I mean, it was, and then it fell. Now it, honestly, this is on the 5-minute, guys. Don't get crazy excited. This does look like a rejection, like a falling out of this wedge here, and then a back test of the trend. But we'll see. This is a 5-minute. Anything can happen. You got to pay cut, Snacks? That's BS. Snacks, tell your boss that Tom Crown said you have to get a raise. 60% of us with 300 votes like that did not get a raise. Huh. Maybe that's problematic. Do you think that's problematic that inflation continues to run hot, yet 60% of us didn't get any raise? 26% of us got a raise, but it's lower than inflation. Only 17% of the people who voted in this poll say that their wages are keeping up with inflation. Scam. Scam. You ready to go? You ready to go to War BG? Go for it, man. What's up, Kinu, Ander, Hoffy? Just plain crazy. Derek Merrill, what's up, man? Jackie Cho, Steve Weira, Getsy, Hugo Boss, Blue Punk Rocker, C-Ron, Scotty 2 Hottie, Orange You Glad. Dude, I could just be shouting people out the whole stream, and I would never probably be able to keep up with it. All right, we have 19 minutes until the inflation, or until the interest rate hike is released. 19 minutes. Stay here. You do have time to grab a beer. You want to grab beer, Seltzer? You got time to grab yourself a little 420 snack. We've hit our 420 goal. You got time. Keep the tab open. Don't go anywhere, because we're going to be the first ones to discover, to find the Fed hike. What's up, Patrick? My man, Patrick. Patrick, Mr. Div, right? I'm going to give you... Hopefully that's Mr. Divvy. Descending wedge on DC. Someone hire me. Hired! I will hire everyone here for $0 an hour. Optical's in the house. There he is. Mr. Optical Art. Shout out to the optical art community, and especially, specifically, to Steve himself. Let me get this pulled up. Let's pull him up. Shout out to the optical art community. You guys rock. You guys rock. Steve rocks. I love you all. I love that you guys join us for this. It's, dollar kind of dunking. But as I said, remember at the start of this, we typically see these kind of run counter until the interest rate decision, and then they usually reverse. It's kind of like across most assets. We're still getting hype. You guys subscribe to Steve. I put his link in the chat. Love Steve. Shout out to the optical art community. Let's see. What else is there to do? 60% not getting a raise. Ryan Hartman asks if you still have a crazy cat, Steve. Steve is awesome. Who's ready for the bing bong? We're going to get some bing bongs up in here. Best regards from Lithuania. Hello, Lithuania. Hopium. Yeah, you got to have a little hopium, man. You got to have a smidgen. As long as it's the good stuff. Don't get it off the street. Shout out to everyone. All 7,000. There's not 7,000 here. Opening a long and short right now. Which one gets hunted first? Probably both of them, Tom. That's what I would say. Steve is awesome. I agree. Mr. Moonbags. Talk about algo, bro. What do you guys want to see? We have like 15 minutes. What do you want? Powell may give a surprise. Market may rise. If Powell gives us a surprise, markets, I think, will go wild. Wild. Depending on what direction that surprise is in. 88 Dodge Soul. I'll pull up a bunch of these. Dodge. Yeah, we'll look at the Doge, at the Dodge, at the dog. Let's see where ADA is at. I wanted to check back in on that. My ADA, we looked at this last stream, I said I wouldn't take this trade. Got stopped out. It does look, though, that it's still in the right direction. Though now I would not go long under resistance. CHZ, we can look at CHZ. We're not going to be able to go in depth, though. We don't have a lot of time, so I'm just going to kind of like rapid fire through these. Rapid fire. Doge actually chilling today, pulling back a little bit. Good. I mean, it has had just a massive rally. We did have a short on Doge. We shorted the top on the 25th. I did close that in profit. I didn't leave it open. 170% from October 26th, reaching a high of 16 cents. I mean, good news is if you bought at the top for Doge, you're now only down 82%. You're only down 82%. Congrats. We're at 1325. Let's see. Doge still looks pretty healthy. It looks pretty healthy. 12-hour kind of a back test of 13 cents. If the low isn't in today for Doge, though, you've got more retracing to do. You had all this time, guys. You had 140 days to buy Doge at 5 cents, basically. Buying it now at 13, it just seems silly, doesn't it? Like, I don't know. I still have Doge. I sold Doge last year, a lot of Doge, but I still have a lot of Doge left. I didn't sell it all. Red candle for the day. I mean, maybe you find support, though, at the daily consolidation, 1218 on Doge. Let's look at CHZ because what the World Cup stuff is coming up. People are kind of hyped for this, right? Ooh, we got a nice bullish kissing here on the 120 on the moving averages for the day. I like that. I haven't looked at this chart in some time. This is CHZ BTC crap. Where's my USD? Because you guys don't care about it. You don't care about the BTC pairs. I do, but you don't. It's fine. CHZ, last time we looked at it, so it wasn't that long. Last time we looked at it, I think this was only a few days ago. I was looking for a potential inverse head and shoulders here. Still could be in play. We haven't seen anything really invalidating of it. Hasn't really moved much, though. I kind of expected more movement on that. Is Doge done with his run? Honestly, I doubt it. It's going to reflect the rest of the market, though. Like, if Bitcoin, let's say Chairman Powell comes in today and is like 800 BPS, like everything dumps, Bitcoin dumps, Doge dump, everything will dump, right? Like every asset will dump. So there's always that threat. I think in the midterm, Doge probably isn't done. But what we could very realistically be seeing is just a dead cat bounce. Like, I pointed this out to you guys a while ago. This decline is very smooth, right? There's really only maybe one macro like resistance. It's going to be sitting up here like 30 cents. So if you see Doge continue up to maybe that 30-cent range and then reject, this could just keep going down. You can continue this, like this bleeding off, and it could go, I don't know, let's say all the way back down to like 1-2 cents. That's possible. I think that's only going to happen if the macro conditions that reflect that. If we see some like maybe black swan event, some kind of serious Fed intervention, they decide they want to get even more hawkish. CHZ does look good. I think I'm going to stick with that inverse head and shoulders pattern. That 17.8 cent support looking pretty solid. You refuse to close a weekly underneath it. I think the go signal on this is a break of the neckline at like 28.5 cents. If this will let me add an alert. There we go. I'd probably be out of a CHZ trade under 16.2. You break the kind of right shoulder, left shoulder, then this is off the table. I could very much see this move up to 44. Let's see what our measured move is. Maybe even 50. I like 50. That's really just like a retest of that, of this consolidation. Distribution, I guess that was, in hindsight. CHZ looking pretty good, though. And even on the weekly back tested, it's right before the drop it fell. And on this weekly, it actually has tested that level. Not bad. What else do you guys want to see? We have got 10 minutes, though. We've got 10 minutes. We won't have much to look at. What's up, car for coin? Like in the background music, it's just some chillin' vibes. Just some chillin'. Let's give car for coin a wrench. If BitBoy trusts him enough to give him a wrench, I will. How is Telcoin looking? Oh god, I don't know. Kevin Partridge, 200 to 300 BPS. A million, jillion, zillion BPS. That's what we're getting today. XRP says Patrick. On the hour and 30-minute charts are always more bullish than bearish. Interesting. Many thanks. You didn't subscribe, Car for Coin. This is the first time you've subscribed. Well, now I'm taking it away. Can we get 1,420 likes? That's a good goal. Danielle Mason. Guys, so we have only 10 minutes. We only have 10 minutes until this comes out. I'll pull up Theta, but we only have 10 minutes. We have to get ready. Oh, our Theta trade's still hot. Ooh, hot for trot. We almost got stopped out. So Theta, this is what I remember saying this last time I looked at Theta, and this is still my opinion. So if you look at Theta, right, does this remind you of anything? It should. If you've been in crypto for a few years, well, even just now 1.5. Does this remind you of anything? I will say that this was a good thing. This was a good thing, if it reminds you of what I'm thinking of. And look, our trade, I guess, is working out as it's in the green now. I'll show you what this looks exactly like. Do you guys see it? Oh, wait, maybe I pulled it up here. Let's do this. Let's do it side by side, right? I'm like, guys, we're not going to spend a lot of time on these. We got to get ready. And then I'm instantly distracted because I like this pattern. Okay. All right, real quick. And then we probably have to start Googling. Okay. Do you see? What does this look like to you? Right? Do you see it? This is Bitcoin. This is BTC, baby. That's BTC. Do you see this? This was in the summer of 2021. This pattern, it's like flat, little bump, flat down, rally, right? Now let's look at Theta. What do you see? Do you see it? That's like all the TA I think I need to do on Theta. I think that's a good pattern. We'll see. There's no guarantees, but that is in my brain identical to the 2021 summer swing low on Bitcoin before it rallied to 69K. I don't know. That's my thoughts. All right. Back to the corn, because we're going to have this interest rate decision in just 7 minutes, guys. 7 minutes. Let's get down to the 1 minute chart. I like it. Bitcoin kind of selling into this. I like that because, as I said, I don't want to see it rally into it. Typically, we see a reversal at the interest rate decision. So I want to see it bleeding. The pop rent pattern. CHZ inverse head and shoulders on weekly up on me. Literally already pointed that out. Literally looked at it. Literally pointed that out. Literally. It's a big old dong. All right. We have 7 minutes, guys. So what we need to do is everyone needs to get their Googling fingers ready. Get your fingers ready to Google. Here is what I recommend, okay? I like to type in Fed interest rate decision, okay? I like to Google it. Now, you won't be able to get it yet. Doesn't matter what shows up here. None of this is going to have the answer. What we need to do is go to tools. If you go to tools on Google, Google kind of sucks lately. So actually, if you could, guys, use different search engines, okay? Google kind of sucks lately. I don't know why. So here's what I do. We put it on last hour. So none of these search results are going to give us the answer. We can see here the Fed is expected to 6 minutes ago. Once 2 o'clock hits, so in 6 minutes from now, let's say Wall Street Journal, Reuters, CNN, Bloomberg, I don't know, any major news source, we're going to be looking for articles published after 2 p.m. So it can be like 2:01 or even 2:01 p.m., right? Has to be after. We're going to Google it. Everyone search slightly different stuff, use different engines. And when we find it, put it in the chat. It's probably going to be 75 BPS, but we don't know. It's probably going to be 75. Put it in the chat, but also put in the source. Please don't just put in 75. Put in 75 Bloomberg, 75 Wall Street Journal, 75 whatever. We are going to crowdsource this. over the almost 4,000 people here. No, there's more than 4,000. 4,002. We almost have 4,200 viewers. That is 10 times 420. That's wild. Get hype. Get freaking hype. It's gonna be hype. It's gonna be so hype. But we crowdsource this and we find it first. No, don't write 75 Putin. Don't write 75 expected. No answers after 2 p.m. or before 2 p.m. will matter. Optical Art Gang, you guys can do it. Wild stream. Guys, don't forget to keep smashing the likes and subscribes if you haven't. We have less than 5 minutes till this is released. I have an alert set, so we'll come back to it. Yes! Yes, Bitcoin is dumping into it. If you rewind, I said, I don't like that it's rallying into this. I want to see this low. In fact, I think I actually drew this earlier in the stream. I want to see it dump into the decision. Because, well, the last few times we've seen it rally into the decision and then it dumps. So I'd rather dump than rally, right? Your grandfather is the source. 420 BPS. That will be accepted. We'll take that. We'll take that. LFG. Imagine 4,000 people around you for real. That'd be claustrophobic. There's too many people. But you guys are always welcome here. As many as we can fit in this digital room in the YouTube metaverse. Doja's not really doing much. It's weird. Check your shorts. Like I said, guys, do not recommend trading into this for this exact reason. I said, oh, look, it looks like we have a little flag. I don't really trust them in Bitcoin and in crypto because we don't see them play out. It is a continuation pattern, but we don't see them play out. It fell out. I said, this looks like a back test and drop. Man, this is... TA before this, though is crazy volatile, is usually very predictable in a way. Like, it just seems to behave similarly before every single one of these meetings. We're getting the damp. I was leaning, when it was up here, I was like, I'm looking for a damp. But now that we're down here, I'm going to lean towards the pamp. The pamp or the damp. I'm filling in an auditorium. That's right. Actually, I will be filling in an auditorium in Miami. That's right. For Decentral. Who's going to Decentral? We have a few times to shoot the shit, or a few minutes to shoot the shit before before we have to start Googling. If you're going to be in Decentral, or if you're going to be in Miami for our Basel, I put my link in the chat. If you use my link to buy a ticket, all of the commission that would go to me goes to charity. And I'll see you in Miami. I hope to see some of you. You can come up and say hi. Like, I'm not actually famous. People don't actually say hi to me in real life. So, like, I don't mind it when people do it at these meetings. Or at these conferences. 0.75 is neutral. No, don't go up. Go back down. We have 1 minute 1 minute 15 seconds. Let me get the timer up. It's like 1 minute 30 seconds. The meeting isn't 30 minutes, but the announcement of the rate hike is in 1 minute. It's about 90 seconds from now. Guys, get your Googlers ready. Get your Googlers ready. We're going to have it first. No result published before 2 p.m. matters. So, I don't know, just keep refreshing, right? Here comes the stop hunt. I don't want to, like, stop looking, though. Look at this wild volatility. I was just like, it's so predictable. And then it slaps me in the face. That's not predictable. If that had happened 2 minutes later, it'd be more predictable. But these are spicy times. Everyone already knows the result. Well, if everyone knows the result, does anyone know the result? 1 minute, get your Googles ready, or Bing, or whatever search. There it is. There's the alert. Whatever search engine you want to use, because Google kind of sucks lately. Let's go. Let's go, let's go, let's go. It's 1:59 and change. We don't have much time. We don't have much time. 2 o'clock is coming. Are we going to play the meeting live? Yes, we are. Yes, we are. In a few seconds, the interest rate decision will be published. We have to crowdsource it. We're going to find it ASAP. More tools, past hour. I wish you could do like past minute. No, not recent. Past hour. Okay, it is going to be 2 p.m. here in a few seconds. Get ready, get ready. We're going to be the first ones. We're going to be the first ones to have it. We're going to have it right here. I mean, I guess it's 75. Get ready. Put it in the chat with the source. Please don't. There it is, 2 o'clock. Let's go. Let's go, let's go, let's go. Check, check. All right, I don't know what happened to my microphone. I'm gonna have to switch it to like not the way I usually do it so we won't have the sound buffering. Thank you for telling me, guys. That's weird. I've never had that happen. Never seen that just randomly go off, but we did it. All right, 75 BPS source, Benjamin Cohen. Well, I'll take it. I'll take it. Benjamin Cohen's, we wouldn't usually use him as a source, but we'll take it. Let me see. All right, so we have now less than 30 minutes till Mr. Chirpo is live. Let's have this up in the window. The god of Olympus. All right, so we got some spices. We got some spicy action here. Kind of as expected here. All right, so I'm guessing 75 BPS. I tried to fix my mic. I couldn't look. So we were talking about how this almost always runs the opposite direction before the decision, right? So I was worried about it rallying before. I got to make this small. I was worried about it rallying into it. When it sold off, I said, this is much better. And so what happened? Literally, it's weird how it happens so predictably. Right here, this is when the interest rate came out. 75 BPS. Let's change this to 75 BPS. Chairman Powell. Center, there we go. And we've got quite a nice candle. Quite a nice candle here. Let's check this out. Not gonna lie, this is not bad. Good, not bad. Actually, I wanna, not on hours, not on minutes. There we go. I just took that off hours, but yes on days. There we go. Look at the volatility. That's what I warned everyone about at the beginning of this, is the volatility into these. Look at that bottom wick into that top wick. Holy heck. This doesn't even really look like it's finished, to be honest. Let's peek at the dollar real fast. Holy crappers. Holy smokers. Holy smokes, boys. Look at that. It's like directly on point. So interest rate is in. This dumped exactly on the interest rate decision. Interesting. Let's take a look at some other stuff here quick. What's oil doing? Moving inversely to the dollar? Sure. Let's check out our major currencies. Likely as the dollar's dumping, we should see some green. We see the Swedish krona. Swedish krona actually gapping up here. Spicy. The peso with a moon candle. We were looking at the beginning of this episode actually for the peso to hit a new 2022 high. I didn't think it would happen this quick. That could happen today. The peso mooning. GBP mooning. For Forex, this is mooning. For Forex, any movement is a moon or a dump. JPY mooning. CAD. Mooning. Let's just say mooning. And weirdly, the yen just didn't move. Or the yuan. The Chinese yuan didn't move at all. Cool. Let's look at stocks. What's going on in the S&P? Nice little... Oh, man. I'm gassy today. I'm gassing. Nice little pemp candle directly at the federal interest rate decision. I like it. 1% move in 5 minutes on stocks. That's pretty wild, actually. Let's see gold. Gold taking a nut. Everything's mooning. We said at the start of this, 75 is what's expected. If we get 75, it's slightly bullish. It's not like moon bullish, but it's the market's got what they were expecting. There's no kind of mix up, right? Here we go. We got 75 as to my knowledge. I still haven't seen it. We see gold is up. Literally on that at 2, exactly when this came out. Gold up 0.6%, which is a wild move for gold. The dollar absolutely eating shit. Sorry, excuse my language. Eating shit on this for some reason. Don't know. That it doesn't really make sense, but I'll take it. I'll take it. When you zoom out on the dollar, though, not much has happened. You've broken, what, like a daily low, yesterday's low? You still have a lot of downside before anything significant happens. This could easily wake up. Easily wake up. Doge responding. Along with it, looks like just crypto in general. Look at this. We had a nice symmetrical... We had a nice symmetrical triangle brewing. And what happened? Top touch, bottom touch, top touch, bottom touch. Break to the bottom, break to the top. It would not surprise me to see this move right back into the symmetrical triangle into the meeting. We've seen this happen too many times. And in fact, I will say, to my memory, correct me if I'm wrong, I think almost every FOMC meeting, right before, we have seen almost this exact candle. Like an hourly candle with a big bottom wick and a big top wick with a big body. And it doesn't end up closing that way, which is the crappy part. Hopefully this time's different, fingers crossed. Hopefully. We have now just about 20 minutes for Chirpow. 20 minutes. We've got a little bit of time. This is why I start every single one of these streams with, I don't recommend trading into these because look at that volatility. Look at this scam wick down, pumps up, and what if it just returns right to the baseline? Everyone gets wrecked. That's probably likely. Miss Teen Crypto, are you here? I saw your text. Miss Teen Crypto said the stream's fire. Is she here? You're fire, Miss Teen Crypto. You guys should check out Miss Teen Crypto. You should subscribe to her. She's good stuff. Good stuff. Bitcoin's flying. Powell will crash everything. Oh, well, it doesn't look like he did right now. I really do kind of expect this to just return. Kind of return to where it was. We just see that happen too much. We see it happen too much. It's like wick bottom, wick top, return. It's like a heartbeat, right? But let's see, is the dollar still falling? That is a nasty candle. Almost 1% in 5 minutes. It's pretty nasty for the dollar. Do I have water in here? Yeah. I do not, but I'm not going to get up. What do you guys want to do? We got 21 minutes. 4.8. Are we good? Are we seriously? Are we going to hit 5K? 5K was like my dream goal. We've already smashed the record. Please don't leave. Please keep the tab open even if you have to go. This is a record-setting stream. Let's get 5,000 concurrent viewers for the first time ever. Record. I'm going to put it up. Record. Record-breaking stream. Let's put this up. Record-breaking stream. Too big. Record-breaking. And the fun hasn't even started. Fun hasn't even started. 20 minutes till chirp-pow, chirp-pow. Graces us with his presence. And that's when it gets real spicy. Pray that Gina blesses us, gives us her favor. Pray. We'll see. The beautiful maiden Gina. Gina, I love you. Notice me, Gina. Kiss me, senpai. 4,800. I don't even know. YouTube's just glitching. It's just glitching out. I can't even tell how many people are here. It's like over. It's over 9,000 someday. 4,600. These are BitBoy numbers. Optical Art Crew in the house. Huge shout out to Steve and the Optical Art Crew. Love you guys. Satashi is in the chat. What's up, Steven Hobby? Miss Teen Crypto. And Steve. You guys subscribe to both. Subscribe to both. If you subscribe to Steve, there's his channel link. Or that's Miss Teen Crypto. Subscribe to Miss Teen Crypto. And Steve and me. Do you understand how well-rounded and how many years of crypto experience you're following in just 3 follows? It's massive. It's insane. It's wild. Get after it. Get after it, boys and girls. The fun is coming. The spice is coming. The spice. What are we doing? What are we doing till then? I gotta make sure everything's set up. That's right. Make sure this is set up. Maybe import some wonderful pictures of my love. Zagina. 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 I did not mean for it to sound so different. Let me see. Let me see. Gina. Let's get the Gina heart up. Look at our Gina flag up. Actually, this last stream, we got some great snaps. We got some great screenshots from the last one. This is my favorite one. That was my favorite one from the last stream. Look at that face. Look at that handsome mug. I'm wearing the same shirt. Don't tell anyone. Nobody knows. That was when I guessed that it would be Gina first, and guess what it was? I called on her and they picked her. Let me get the Gina heart up though. Sorry guys, look, keep the energy up, keep smashing likes, keep subscribing, keep chatting. I'm trying to find the Gina flag. Where is it? Where is it? There it is. Our Gina flag. Let's keep that in the corner. We'll keep that down here next to my heart. Down next to my heart. We have a record-breaking stream. Woot, woot. And it's just beginning. Sir Chirpow. How many minutes on the clock to the Chirpow? 16 minutes. 16 minutes. We haven't flatlined yet. That's good. No flatline yet. What's up, Oh No 2K? Good to see you, brother. That's right. SDAF is just whatever. People can just spam. It's fine. It's a hype day. The only spam you guys gotta like carry about. No, you don't have to hide people. The only spam you guys have to worry about today is like if it's like bots. I don't know, spamming crap or those like adult channel bots. You can hide those. But everybody else, let them go. What's up, Crypto Stevo? How you doing, brother? Good to see you, Jesse War. Tor. Spam, spam, spam. Wonderful spam. You are here, minimal living. And I'm shouting you out because I see you. Max Chaos. Is 75 good or less better? So, depends on what you mean for good. Market go up good, you'd want less. 75 is okay for market go up though, because that's what markets were expecting. Bullish. Bitcoin is bullish. That's right. Optical Art, the big bear. He is a big bear, and I'm a big bull. And when you combine us, it's like I don't know, like a transformer, and we're just unstoppable. Let's see what's moving in crypto. Litecoin still the biggest mover in the last 24 hours. Not a lot's moving. Interesting. Actually going to legitimately pull Litecoin up again. Shout out to Igor. You know, let's get these out of the way real quick. Shout out to Igor V for subscribing during this live stream. Lauren, Chiroska, Marcel Mole, SMC Trader, Unhived Mind, The Lonely Traveler. We're not lonely anymore, brother. The Waves of the Jedi. I like that name. Dougie Mather, James Hoban, Craig Chance, Ricardo Rio. Stephen Hobby became a member. A bro. Sweaty Dave, I'm sorry I missed your super chat. Thanks for just saying thanks. LFG. That's right. Love you, Sweaty Dave. Clinton Query, I missed yours too. Oh no, I saw that earlier. I don't think this is all the subscribers. I think there's been like a few hundred. Daryl Salone and Crypto Canna and P. Charlotte and Jared Wilson all subscribing at the exact same second. Can we check Ocean quick? All right, we have 15 minutes. I can pull up Ocean. Just for you, my friend. Just so you know, guys, we don't usually do like kind of like super chat requests during the FOMC meetings because we don't do a lot of TA. Is this the only Ocean chart I have? Mostly because we don't have a lot of time, and any individual chart is really just going to reflect whatever else is going on in the macro. Like, really. But I'll pull it up for you because we have 15 minutes. I didn't know what else to do. We're going to make it quick like we've made all of them quick, though. Let's map out our macros. The macros. Got waning momentum. It is still selling momentum, but it is waning. Let's see. You got your low, what, 14.5. This really wicked low. Really, really wicked low. It's rapid chart. Rapid chart. Let's effing go, fam. Let's go. Less than 15 minutes till the chirpow. Till chirpow. You look like you're really range bound at the moment between 21.2 and 14.5. You did have a higher high, but you really wicked down. That shows some selling pressure. You have closed daily candles higher here. So maybe that selling pressure is weakening. Maybe. Let's maybe do this. Okay. You got a pretty major trend line here. You came close with a higher low, though. All right. If Ocean can hold kind of this support here at 16 cents, like this, I can definitely see it making a run for that trend line and a run up to, let's see, like 21.2. That's looking pretty reasonable. That's a pretty falling pattern. I'd expect to break to the upside. Really nothing stands out to me on Ocean at the moment. That low wick low. That low wick low to like 9 cents though. That really clears out. That really cleared out the order books. That may have taken the selling pressure kind of off Ocean. I'm going to need to see that descending trend line break. I'd really like to see kind of 21, 22 cents break before I get excited. Break 22, you got a pretty clear path. Pretty clear path to what? 31.2? There's your macros. I appreciate the super chat, my friend, but we got too much going on. Chairman Powell will be on soon. I need to get in the zone. Andrew Correll is in the zone. Calbert McKenzie's in the zone. Max Chaos is in the zone. Andrea Pays is in the zone. Jordan Gray, James Teckleberry, Patsy. We got so many subscribers. Michael Morales, my bad. Keep subscribing, guys. Keep hyping the chat. We are minutes away. Get Benjamin Cohen. Someone get Benjamin Cohen on here. I'll send him a link. You know what? I'll send him a link. Although Chairman Powell's gonna speak, it'll be hard for us to. It'll be hard for us to like, I don't know, conversate, or for him to say much once it starts. I'll message him right now. Wanna come on my stream? Right now? Question mark. There we go. I messaged him. Let's see if he responds. I don't have high hopes. I don't have high hopes for that. We'll see. Federal funding rate 2.4%. I love Benjamin Cohen, by the way. So few analysts do I respect like Benjamin Cohen. So few. Okay. Let's see. We are moments away from the Chirpow. Light it up. Light it up. This is why we go live for these guys. It's always spicy. Even if nothing happens after this. Like we see crazy volatility, whipsawing. Whew. I thought we were just going to return to kind of the mean here at 20,500. Oh, shiest. I just remembered something. We are testing the 200. Or we are testing the 200 weekly. 20,700. I hate that it does that. I wish it would display it a little clearer. This is actually getting kind of exciting. So we're retesting that 200 weekly. Let me double check. 20 weekly. 20 weekly? Yes. 20 weekly. My bad. 200 weekly is high above us. Retaking the 20 weekly could be a very bullish event. So we can see it gets janky, but we can see we've had one, let's say called 2, 3 tests of the 20 weekly. This is number 4 with how many? With how many higher lows? 1, 2, 3. Well, this is actually a lower low. Not as clear, but we see that resistance that is the 20 weekly being hammered. This is our 4th attempt. Each time you test a resistance, what happens? It weakens. The resistance weakens. That's what we're seeing. If Chairman, I'm going to make a kind of bold statement. If Chairman comes out and says something spicy today, we may see Bitcoin retake the 20 weekly, and then my next upside target gonna be the 200. Gonna be the 200 weekly. Benjamin Cohen did not reply, at least not yet. If Chairman, then Gina. It's science. If Chairman, then Gina. I'm gonna mark this though. How you guys feeling? Doing good? You're vibing? Feeling good? Let's mark it because this thing is very buggy. It is exactly at 20,750. That's right, 200 weekly on it. 20 weekly. I keep goofing that. I'm too excited, guys. I'm too excited. We don't get to do these. There we go. Might be wrong with this. We don't get to do these meetings every day. We have, we've lost a bunch of viewers. That's the worst time to tune out. The worst time to turn off the stream is right now. Chairman will be live in not even 8 minutes, and we've lost a bunch of viewers. Don't leave now. Don't leave now. Wait, did we hit 5,000? Am I tripping? Am I tripping? I'm gonna show you guys what I see. Wait. I think we might have. This is what I see. It says 5,100. I don't know. I didn't see that. Did anyone see that like in the chat? Like, did you see it on YouTube? That was at 2. So it was like exactly when the decision came out. That makes sense, actually, to see a spike then. You might get another spike. It is 2:23. 2:30 is when Chairman speaks. 2:30. We have just minutes to go. What do we want to do? 3,500 votes on our poll. 52% of us not having their wages keep up with inflation. I just don't understand it. Like, people probably should be rioting. If half or more, and actually that means it's more like 75%, because 25% of us are saying they did get a raise, but it didn't keep up with inflation. So if 75% of us are making less year over year doing the same job, not even making less, but literally having less spending power, people should be freaking out, right? When does it end? Like, when does that end? It doesn't. Let's end that poll. Skip this song? Yeah, sure. This is a chillin' song. Maybe we need hyper songs. Hyper. Is this Yacht? There's a station called Yacht Rock. I don't know what Yacht Rock is, but I don't have a yacht. Here we go. It ends at 0. That's exactly what it is. This is why we're in crypto. We are in crypto to have an alternative from the system that is what we're looking at. 75% of us are making less money year over year. We're losing money. We're working more. We're losing value. We're losing purchasing power. Does crypto solve that? It could. We don't know. That's the point of crypto. The whole reason it was created is essentially for that. Is it going to play out that way? We don't know. It has so far. undeniably in the last 14 years, Bitcoin has outpaced anything. If you look at it in the last year, it had, it's been down, but over the last 14 years, it has. Will it continue into the future? We don't know. If you're here, you're probably making the bet that it will. But it, above else, is giving us an alternative. That's what's important. Before cryptocurrency, there was no alternative. You could barter. Sure, you could barter. That's not really reasonable to expect people to be able to like barter day to day, right? It doesn't really make sense. Don't really make sense. It'd be great if we could have a barter system. I'd be down, but it's just not very realistic. Not very realistic. Not with internationally traded goods, etc. Let's see. How? I should have hooked up that third monitor. Damn it. Damn it. Damn it, Bobby. Damn it, Bobby. Bobby. All right. We have 4 minutes, not even. So I'm gonna get the stream ready for Chirpow. Are you ready for Chirpow? Let's see if this works. I remember how I did this last time. I have 3 monitors, but I goofed it up. I didn't put in the third one today. How are we gonna do this? How did I do this last time? I think I might have done it this way. Get hyped. Get ready. It's almost Chirpow o'clock. Chirpow! Let's hit the play button. I'm gonna refresh it first, then hit the play button. You guys want to listen to their waiting music? Probably not. Whoa, Mohammed. Sorry, Mohammed Shaban. Shaban? Sorry if I said that wrong. Gifting 10 memberships. Look at this champ. Give him a round of applause. Mohammed, thank you. That's awesome. Congrats to Matthew Barnes. I'm my hero. Cryptogenic Dude, Crypto Doc, RJB Tour. Satoshi Nakamoto himself, the inventor of Bitcoin, is a member of my channel. Moonboy and Jesse Lira. Dude, Mohammed, that's awesome. You're the first person to gift memberships, actually. I'm the only one who's used it. I appreciate you. Thank you. I really appreciate that. That's dope. What a day to do it, too, man. That's really great. You're the best. You're the best. I hope I said your name wrong. Shout out to Mohammed. He a G. Hold the hairline. How's my hairline? Am I going bald? Ooh, 24. Less than 3 minutes. It looks like 2.5 minutes till Chirpow time. Bitcoin reaching up to the 20 weekly, busting through. Fingers crossed. Fingers crossed. I'm gonna make this tinier so it's not so annoying. Middle, bottom. Boop. There we go. Battling with the 20 weekly. The moving average Bitcoin has seemingly been unable to hold up or unable to move through. Finding resistance there, potentially with the right language from Fed Powell, we could retake it, but that might be a hope. Ben hairline look good. I don't know. That was very nice of you, Mohammed. That dope. No, literally no one else has done it. So fedora tip, hats off to you, my friend. 75 is positive. 75 was very neutral, but positive in the sense of markets very much rely on consistency or predictability. They don't like things getting mixed up. Typically, when things get mixed up in markets, the markets dump, right? Even if the mix-ups are good. So 75 was expected. That's what we got. So is it good? I guess. I guess. It's not bad. It's good that it is what was expected. I think I'll say that. All right, guys, we have less than 1 minute to go. I'm going to try not to talk through the whole thing. I'm going to do my best to be an observer, only chime in when necessary, right? Dollar dumped. But we do see it kind of stopped its dumping, actually, in the last few minutes here. Yeah, that looks like a weak bounce. All right, Chirpow. Ball's in your court, Chirpow. I'm going to pause our music. We'll play theirs. Just so we have the audio ready to go. There we go. Gina? Gina? Gina. Could Gina please speak? Go. Here we go, boys and girls. We have the dollar and Bitcoin up live. Any minute now. The suspense. Let's put US dollar. It's because you guys won't be able to see the watermarks. That was weird. That was weird. Are they buffering or am I buffering?
Good afternoon.
There we go.
My colleagues and I are strongly committed to bringing inflation. We have both the tools that we need and the resolve it will take to
What in the fudge?
work for anyone. In particular, without price stability, we will not achieve a
The Fed needs
sustained
to upgrade
period
their
of
connection.
strong labor market conditions that benefit all. The FOMC raised our policy interest rate by 75 basis points, and we can. The FOMC raised our policy interest rate by 75 basis points, and we can. Increases will be appropriate. We are moving our. Increases will be appropriate.
Why is it doing this? I'm going to reload it quick. We don't usually have this problem.
Process of significantly reducing the size of our balance sheet. Restoring price stability will require maintaining a restrictive stance of policy for some time. Economic development. More to say about today's monetary policy actions after briefly reviewing economic development. It has slowed significantly. Page rose.
What is happening? I have to jump on my phone because of the way this is set up.
Quarter, but is unchanged so far this year. Indicators point to modest action.
Come on.
Quarter, but is unchanged so far this year. Indicators point to modest action. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. It can significantly, largely reflecting.
All right, I have another idea. We're going to try an emergency style. Let's try it this way.
Extremely tight. Year low. Job vacancy is still very high, and wage growth elevated. Is still very high, and wage growth elevated for August and September. Although agencies have moved below their highs month over August and September. Although agencies have moved below their highs in the year, the labor market continues to be out of balance, with demand substantially exceeding the supply of available workers. Anticipation goal of 2%.
All right, I'm trying to figure this out.
Goal
This
of
is
2%.
their feed.
PCE prices rose, citing the volatile food and energy categories.
It's not us.
Core PCE prices.
We're going to try it on their YouTube.
PCE prices rose 5.1%. And the recent inflation data again have come in higher than expected. Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food and has created additional upward pressure on inflation. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 75 basis points. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. With today's action, we've raised interest rates by 3.75 percentage points this year. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. Financial conditions have tightened significantly in response to our policy actions, and we are seeing the effects on demand in the most interest rate sensitive sectors of the economy, such as housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. That's why we say in our statement that in determining the pace of future increases in the target range, we will take into account the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation. At some point, as I've said in the last two press conferences, it will become appropriate to slow the pace of increases as we approach the level of interest rates that will be sufficiently restrictive to bring inflation down to our 2% goal. There is significant uncertainty around that level of interest rates. Even so, we still have some ways to go, and incoming data since our last meeting suggests that the ultimate level of interest rates will be higher than previously expected. Our decisions will depend on the totality of incoming data and their implications for the outlook for economic activity and inflation. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. We're taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices in the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals.
Yeah.
Thank you, and I look forward to your questions.
Gina. Gina goes first.
Thank you. Colby Smith with the Financial Times. On the need to slow the pace of rate increases at some point, is a downshift contingent on a string of better inflation data specifically between now and, let's say, the December meeting? Or is that something that the Fed could potentially proceed with independent of that data, given the lagged effects that you mentioned?
So a couple things on that. We do need to see inflation coming down decisively, and good evidence of that would be a series of down monthly readings. Of course, that's what we'd all love to see, but I've never thought of that as the appropriate test for slowing the pace of increases or for identifying the appropriately restrictive level that we're aiming for. We need to bring our policy stance down to a level that's sufficiently restrictive to bring inflation down to our 2% objective over the medium term. How will we know that we've reached that level? Well, we'll take into account the full range of analysis and data that bear on that question, guided by our assessment of how much financial conditions have tightened, the effects that tightening is actually having on the real economy and on inflation, taking into consideration lags, as I mentioned. We will be looking at real rates, for example, all across the yield curve and all other financial conditions, and as we make that assessment.
It's a 4:20 day.
Hi, Howard Schneider with Reuters.
Schneider.
Look, I'm sure there's going to be tons of confusion out there about whether this means you're going to slow in December or not. Would you say that the bias right now is not for another 75 basis point increase?
So what I want to do is put that question of pace in the context of our broader tightening program, if I may, and talk about the statement language along the way. So I think you can think about our tightening program as really addressing three questions. The first of which was, and has been, how fast to go. The second is how high to raise our policy rate. And the third will be eventually how long to remain at a restrictive level. So on the first question, how fast to tighten policy, it's been very important that we move expeditiously, and we have clearly done so. We've moved 3.75% since March, admittedly from a base of 0. It's a historically fast pace, and that's certainly appropriate, given the persistence and strength in inflation and the low level from which we started. So now we come to the second question, which is how high to raise our policy rate, and we're saying that we'd raise that rate to a level that's sufficiently restrictive to bring inflation to our 2% target over time, and we put that into our post-meeting statement. Because that really does become the important question, we think now, is how far to go, and I'll talk more about that. We think there's some ground to cover but before we meet that test, and that's why we say that ongoing rate increases will be appropriate. And as I mentioned, incoming data between the meetings, both the strong labor market report, but particularly the CPI report, do suggest to me that we may ultimately move to higher levels than we thought at the time of the September meeting. That level is very uncertain, though, and I would say, we're going to find it over time. Of course, with the lags between policy and economic activity, there's a lot of uncertainty. So we note that in determining the pace of future increases, we'll take into account the cumulative tightening of monetary policy, as well as the lags with which monetary policy affects economic activity and inflation. So I would say as we come closer to that level, move more into restrictive territory, the question of speed becomes less important than the second and third questions. And that's why I've said at the last two press conferences that at some point it will become appropriate to slow the pace of increases. So that time is coming, and it may come as soon as the next meeting or the one after that. No decision has been made.
It may.
It is likely we'll have a discussion about this at the next meeting, a discussion. To be clear, let me say again, the question of when to moderate the pace of increases is now much less important than the question of how high to raise rates and how long to keep monetary policy restricted, which really will be our principal focus.
If I could follow up on that, to what degree was there an importance or weight given to a need to signal this possibility now, given all the concerns really around the globe about Fed policy sort of driving ahead and everybody else,
He's like,
dealing
"Answer
with
my
their own
question."
stress as a result?
Well, I think I'm pleased that we have moved as fast as we have. I don't think we've over-tightened. I think there's very difficult to make a case that our current level is too tight, given that inflation still runs well above the federal funds rate. Sure. So I think that at this meeting, the last two meetings, as I've mentioned, I've said that there would come a point, and this was a meeting at which we had a discussion about what that might mean, and we did discuss this, and as I mentioned, we'll discuss it again in December. But there's I don't have any sense that we've over-tightened or moved too fast. I think it's been good and a successful program. That we've gotten this far this fast. Remember, though, that we still think there's a need for ongoing rate increases, and we have some ground left to cover here, and cover it we will.
He's not wearing a purple tie. Weird. Gina, put the microphone down. Get
Nick
Gina.
Chamarosa of the Wall Street Journal. Chair Powell, core PCE inflation on a 3 or 6 month annualized basis and on a 12-month basis has been running in the high fours, close to 5%. Is there any reason to think you won't have to raise rates at least above that level to be confident that you are imparting enough restraint to bring inflation down?
So this is the question of does the policy rate need to get above the inflation rate? And I would say there are a range of views on that. That's the classic Taylor principle view. But I would think you'd look more at a forward-looking measure of inflation to look at that. But I think the answer is we'll want to get the policy rate to a level where it is where the real interest rate is positive. We will want to do that. I do not think of it as the single and only touchstone, though. I think you put some weight on that. You also put some weight on rates across the curve. Very few people borrow at the short end at the federal funds rate, for example. So households and businesses, if they're very, meaningfully positive interest rates all across the curve for them, credit spreads are larger, so borrowing rates are significantly higher. And I think financial conditions have tightened quite a bit. So I would look at that as an important feature. I'd put some weight on it, but I wouldn't say it's something that is the single dominant thing to look at.
If I could follow up, what is your best assessment or the staff's best assessment right now of the current rate of underlying inflation?
I don't have a specific number for you there. So there
no
are many,
answers
many
for you,
models
sir.
that look at that. And I mean, one way to look at it is that it's a pretty stationary object, and that when inflation runs above that level, for sure, substantially above for some time, you'll see it move up, but the movement will be fairly gradual. So I think that's what the principal models would tend to say. But I wouldn't want to land on any one assessment. There are many different, as you know, people who publish an assessment of underlying inflation.
Thank you.
He's too confident. I don't like it. Gina.
Hi, Chair Powell. Thank you for taking our questions. Gina Smiley,
Let's
New York
go.
Times. I wonder, do you see any evidence at this stage that inflation is or is at risk of becoming entrenched?
Is inflation becoming entrenched? So I guess I would start by pointing to expectations. So if we saw longer term expectations moving up, that would be very troubling. And they were moving up a little bit at the middle part of this year, and they've moved now back down. That's one piece of data. Shorter term inflation expectations moved up between the last meeting and this meeting. And we don't think those are as indicative, but they may be important in the wage setting process. There's a school of thought that believes that. So that's very concerning. I guess the other thing I would say is that the longer we're now 18 months into this episode of high inflation, and we don't have a clearly identified scientific way of understanding at what point inflation becomes entrenched. And so the thing we need to do from a risk management standpoint
It's
is
almost
to
like
use
that's
our
your job.
tools forcefully but thoughtfully and get inflation under control, get it down to 2%, get it behind us. That's what we really need to do and what we're strongly committed to doing.
Rachel.
So many questions. Everyone's hands up.
Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. The statement points to lag times. I'm wondering if you can walk us through how you judge those lag effects, what that timeline looks like over the coming months or even a year, and where you would expect it to show up in different parts of the economy.
Yeah, so the way I would think about that is it's a commonly, for a long time, thought that monetary policy works with long and variable lags, and that it works first on financial conditions and then on economic activity and then perhaps later than that even on inflation. So that's been the thinking for a long time. There was an old literature that made those lags out to be fairly long. There's newer literature that says that they're shorter. And the truth is we don't have a lot of data of inflation of this high in what is now the modern economy. One big difference now is that it used to be that you would raise the federal funds rate, financial conditions would react, and then that would affect economic activity and inflation. Now, financial conditions react well before, in expectation of monetary policy. That's the way it has moved for a quarter of a century, is in the direction of financial conditions, then monetary policy, because the markets are thinking what is the central bank going to do. And there are plenty of economists that also think that once financial conditions change, that the effects on the economy are actually faster than they would have been before. We don't know that. I guess the thing that I would say is it's highly uncertain. And so from a risk management standpoint, we do need, it would be irresponsible not to ignore them. You want to consider them, but not take them literally. So I think it's a very difficult place to be, but I would tend to want to be in the middle, looking carefully at what's actually happening with the economy, and trying to make good decisions from a risk management standpoint, remembering, of course, that if we were to over-tighten, we could then use our tools strongly to support the economy. Whereas if we don't get inflation under control because we don't tighten enough, now we're in a situation where inflation will become entrenched, and the costs, the employment costs in particular, will be much higher potentially. So from a risk management standpoint, we want to be sure that we that we don't make
Yeah,
the
this is
mistake
one of the most talked
either
of.
failing to tighten enough or loosening policy too soon.
It's talking
I
about
could follow up.
preferably
Should we
over-tightening.
interpret the addition to the statement to mean that more weight is put into those lag effects than they would have been after previous rate hikes?
So I think as we move now into restrictive territory, as we make these ongoing rate hikes and policy becomes more restrictive, it'll be appropriate now to be thinking more about lag. Of course, we think about the lags are just sort of a basic part of monetary policy, but we will be thinking about them. But we won't be, I think we'll be considering them, but because it's appropriate to do so. Let me say this: it is very premature to be thinking about pausing. So people, when they hear lags, they think about a pause. It's very premature, in my view, to think about or be talking about pausing our rate hike. We have a ways to go. Our policy, we need ongoing rate hikes to get to that level of sufficiently restrictive, and we don't, of course, we don't really know exactly
This
where
is
that is.
so
We have a sense,
hawkish.
and we'll write down in the December meeting, a new summary of economic projections which updates that. But I would expect us to continue to update it based on what we're seeing with incoming data.
Thanks, Chair Powell. Neil Irwin with Axios. As you look around the economy, the clearest impact of your tightening so far has been on housing, maybe some venture-funded tech companies. It's been relatively narrow in terms of labor market, consumer demand, a lot of sectors. You don't see a ton of effect. Is the pathway and channels through which monetary policy works changing? Is it narrower than it used to be? And on housing in particular, are you at all worried that you're crimping housing supply in ways that might cause problems down the road?
I don't know that the channels through which policy works have changed that much. I would say a big channel is the labor market, and the labor market is just very, very strong, very strong. And households, of course, have strong balance sheets. And so we go into this with a strong labor market and excess demand in the labor market, as you can see through many different things, and also with households who have strong spending power built up. So it may take time. It may take resolve. It may take patience. It's likely to get inflation down. I think you see from our forecasts and others that it will take some time for inflation to come down. It'll take time, we think. Sorry, was I getting to your question there?
Sorry,
the
I
housing
don't
part of it.
answer
Yeah,
questions, so I got lost.
We look at housing. Of course, housing is significantly affected by these higher rates, which are really back where they were before the global financial crisis. They're not historically high, but they're much higher than they've been. And you're seeing housing activity decline. You're seeing housing prices growing at a faster rate, and in some parts of the country declining. I would say the housing market was very overheated for the couple of years after the pandemic as demand increased and rates were low. We all know the stories of how overheated the housing market was, prices going up, many bidders, no conditions, that kind of thing. So the housing market needs to get back into a balance between supply and demand. We're well aware of what's going on there. From a financial stability standpoint, we didn't see in this cycle the kinds of poor credit underwriting that we saw before the global financial crisis. Housing credit was much more carefully managed by the lenders. So it's a very different situation and doesn't appear to present financial stability issues. But no, we do understand that's really where a very big effect of our policies is.
Victoria.
Hi, Victoria Guida with Politico. I wanted to ask about the labor market. You mentioned early on again that job openings are very high compared to available workers, and I'm just curious to what extent you do and don't draw a signal from that. So, for example, if wage growth is slowing and if maybe the unemployment rate starts to tick up, will that make you sort of decrease your focus on job openings? What do you see? Are wages what's really important? How are you thinking about the labor market as it relates to inflation?
So we talk a lot about vacancies and the vacancy to unemployed rate, but it's just one. It's just another data series. It's been unusually important in this cycle because it's been so out of line. But so has quits, so have wages. So we look at a very wide range of data on the labor market. So I'd start with unemployment, which is typically the single statistic you would look to is at a 50-year low, 3.5%. We're getting really nothing in labor supply now. We had, I think, a very small increase this year, which we had really thought we would get that back. Most analysts thought we would get some labor supply coming in. You mentioned wages, so I guess I would characterize that as sort of a mixed picture. It's true with average hourly earnings you see, so I would call it a flattening out at a level that's well above the level that would be consistent over time with 2% inflation, assuming a reasonable productivity. There with the ECI reading this week, again, a mixed picture. The headline number was a disappointment. Let's just say it was high. It didn't show a decline. There's some rays of light inside, that if you look at private sector workers, that did come down. The compensation did come down. But overall, though, the broader picture is of an overheated labor market where demand substantially exceeds supply. Job creation still exceeds, the sort of the level that would hold the.
He never says anything or answers any questions. He's just like going over the same crap.
Or signs that sort of the beginning of a gradual softening is happening. And, maybe that's there, but it's not obvious to me because wages aren't coming down. They're just moving sideways at an elevated level, both ECI and average hourly earnings. We would love to see vacancies coming down, quits coming down. They are coming down. Vacancies are below their all-time high, but not by as much as we thought because, and that, the data series is volatile. We never take any one reading. We always look at, 2 or 3. So it's a mixed picture. I don't see the case for real softening just yet, but we look at, I guess as I just showed you, we look at a very broad range of data on the labor market.
So do you see wages as being a significant driver of inflation?
I think wages have an effect on inflation, and inflation has an effect on wages. I think that's always been the case. There's always a going back and forth. The question is that really elevated right now? I don't think so. I don't think wages are the principal story of why prices are going up.
First fair
I don't
thing you
think
said.
that. I also don't think that we see a wage price spiral. But again, it's not something you can, once you see it, you're in trouble. So we don't want to see it. We want wages to go up. We just want them to go up at a level that's sustainable and consistent with 2% inflation. And we think we can. We do think that given the data that we have, that this labor market can soften without having to soften as much as history would indicate through the unemployment channel. It can soften through job openings declining. We think there's room for that, but we won't know that. That'll be discovered empirically.
We don't look at the data, so we don't know. We don't see it. We don't look at it.
Thank you so much. Kayla Tausche from CNBC. Earlier last month, the United Nations warned that there could be a global recession if central banks didn't change course. The new UK Prime Minister warned of a profound economic crisis there. And I'm wondering how the Fed is weighing international developments in light of a very strong economy here in the U.S. that would seem to be bucking those trends.
So, of course, we keep close tabs on economic developments that are relevant to the economy abroad. We're in very frequent contact with our foreign counterparts, both through the IMF meetings and the regular meetings with central banks that we have, and I have one this weekend with many central bankers. So we're in touch with all of that. So I guess it's clearly a difficult time in the global economy. We're seeing very high inflation in Europe, significantly because of high energy prices related to the war in Ukraine. And we're seeing China's having issues with the zero COVID policy and much slower growth than we're used to seeing. So we see those difficulties. The strong dollar is a challenge for some countries, but we take all of that into account in our models. We think about the spillovers and that sort of thing. Here in the United States, we have a strong economy. And we have an economy where inflation is running at 5%. Core PCE inflation, which is a really good indicator of what's going on for us, is the way we see it, is running at 5.1% on a 12-month basis and sort of similar to that on a 3, 6, and 9-month basis. So we know that we need to use our tools to get inflation under control. The world's not going to be better off if we fail to do that. That's a task we need to do. Price stability in the United States is a good thing for the global economy over a long period of time. Price stability is the kind of thing that pays dividends for our economy for decades, hopefully. Even though it may be difficult to get it back, getting it back is something that provides value to the people we serve for the long run.
If I could just follow up on that. Thank you. The Fed has acknowledged in the past that that the tools that you have don't affect things like energy and food prices that stem from some of those conflicts overseas, and they're some of the biggest pain points for consumers. So as you pursue the current path that you've outlined, is there a risk that some of those prices simply don't come down?
So we don't directly affect, for the most part, food and energy prices, but the demand channel does affect them just at the margin. The thing about the United States is that we also have strong, in many other jurisdictions, the principal problem really is energy. In the United States, we also have a demand issue. We've got an imbalance between demand and supply, which you see in many parts of the economy. So our tools are well suited to work on that problem, and that's what we're doing. You're right, though. We don't, the price of oil is set globally, and it's not something we can affect. I think by the actions that we take, though, we help keep longer-term inflation expectations anchored, and keep the public believing in 2% inflation by the things that we do, even in times when energy is part of the story of why inflation is high.
Literally, no one believes in 2%.
Hi, Chair Powell. Janelle Marte with Bloomberg. So the Fed is facing two more ethics-related incidents with the revision of the financial statements from President Bostic and President Bullard speaking at a closed event. So some senators, like Elizabeth Warren, are saying that this is a sign of greater ethics problems at the Fed. Could you talk about what this does to the public's trust in the bank and what the Fed is doing to prevent this kind of behavior from becoming common?
Sure. So you're right. The public's trust is really the Fed's and any central bank's most important asset. And anytime one of the policymakers violates or falls short of those rules, we do risk undermining that trust, and we take that very seriously. We do. So at the beginning of our meeting yesterday, actually, we had a committee discussion of the full committee on the importance of holding ourselves individually and collectively accountable for knowing and following the high standard that's set out in our existing rules with respect to both personal investment activities and external communications. We've taken a number of steps, and I would just say we do understand how important those issues are. I would say that our new investment program that we have is up now and running, and actually it was through that the problems with President Bostic's disclosures were discovered when he filed his new disclosures. That's, we now have a central group here at the Board of Governors that looks into disclosures and follows them and approves people's disclosures, and also all of their trades. Any trade anyone has to make who's covered has to be pre-approved, and there's a lag. It has to be.
Why can the Federal Reserve own any or trade any stocks, period? It's absurd.
System. It worked here. And I think we all said to each other yesterday morning, we recommitted to each other and to this institution to hold ourselves to the highest standards and avoid these problems.
Do you have an update on the investigations that are pending?
I don't. So, as you know, I referred the matter concerning President Bostic to the Inspector General. And once that happens, I don't discuss it with the Inspector General with anybody. It's just the Inspector General has the ability to do investigations. We don't really have that, so that's what he's doing.
Michael McKee from Bloomberg Television and Radio. Earlier this year, you touted the 3-month bill yield out to 18 months as the yield curve with 100% explanatory power, and you said, quote, "If it's inverted, that means the Fed's going to cut, which means the economy is weak." that curve is only 2 basis points away from inversion now. So I'm wondering why you are so confident that you have not over-tightened, particularly given that rates work with a lag.
Well, so we do monitor the near-term forward spread. You're right, and that's been our preferred measure. We think it, just empirically, it dominates the ones that people tend to look at, which is
as long as they're committed, I'm fine. I'm fine.
And also, you have to look at why things, why the rate curve is doing what it's doing. It can be doing that because it expects cuts, or because it expects inflation to come down. In this case, if you're in a situation where the markets are pricing in significant declines in inflation, that's going to affect the forward curve. So yes, we monitor it. You're right, and that's what I would say.
If I could follow up, you also said several meetings ago that the risk of doing too little outweighed the risk of doing too much. Is what you're trying to tell us today is that that risk assessment has changed a little bit?
Well, what's happened is time has passed, and we've raised interest rates by 375 basis points. I would not change a word in that statement, though. I think until we get inflation down, you'll be hearing that from me. Again, if we over-tighten, and we don't want to, we want to get this exactly right, but if we over-tighten, then we have the ability with our tools, which are powerful, to, as we showed at the beginning of the pandemic episode, we can support economic activity strongly if that happens, if that's necessary. On the other hand, if you make the mistake in the other direction and you let this drag on, then it's a year or two down the road, and you're realizing inflation behaving the way it can, you're realizing that you didn't actually get it, and you have to go back in. By then, the risk really is that it has become entrenched in people's thinking, and the record is that the employment costs, the cost to the people that we don't want to hurt, they go up with the passage of time. That's really how I look at it. So that isn't going to change. What has changed, though, you're right, is we're farther along now, and I think as we're farther along, we're now focused on that. What's the level we need to get to rates, and I don't know what we'll do when we get there. By the way, we'll have to see. There's been no decision or discussion around exactly what steps we would take at that point, but the first thing is to find your way there.
Thanks, Chris.
Thank you. Chris Rugaber at Associated Press. Just to go back to housing for a minute, you mentioned the impact that rate increases have had on housing. Home sales are down 25% in the past year and so forth, but none of this is really showing up, as you know, in the government's inflation measures. And as we go forward, private real-time data is clearly showing these hits to housing. Are you going to need to put a greater weight on that in order to ascertain things like whether there's over-tightening going on? Or will you still focus as much on the more lagging government indicators?
So this is an interesting subject. So I start by saying, I guess, that the measure that's in the CPI and the PCE, it captures rents for all tenants, not just new leases. And that makes sense, actually, because that for that reason, that conceptually, that's sort of the right target for monetary policy. And the same thing is true for owner's equivalent rent, which comes off of it's a reweighting of tenant rents. The private measures are of course good at picking up the at the margin the new leases, and they tell you a couple things. One thing is I think right now, if you look at the pattern of that series of the new leases, it's very pro-cyclical. So rents went up much more than the CPI and PCE rents did, and now they're coming down faster. So the implication is that there are still, as non-new leases roll over and become and expire, right? There's still in the pipeline, there's still some significant rate increases coming, okay? But at some point, once you get through that, the new leases are going to tell you that what they're telling you is there will come a point at which rent inflation will start to come down. But that point is well out from where we are now. So we're well aware of that, of course, and we look at it. And but I would say that in terms of what the right way to think about inflation really is to look at the measure that we do look at, but considering that we also know that at some point you'll see rents coming down.
Great. And just a quick follow. It looks like stock and bond markets are reacting positively to your announcement so far. Is that something you wanted to see? Is that a problem, or how that might affect your future policy to see this positive reaction?
You know, we're not
not
targeting
stocks.
any one or two particular things. You know, our message should be, what I'm trying to do is make sure that our message is clear, which is that we think we have a ways to go. We have some ground to cover with interest rates before we get to that level of interest rates that we think is sufficiently restrictive. And putting that in the statement and identifying that as a goal is an important step. And that's it's meant to put that question really as the important one now going forward. I've also said that we think that the level of rates that we estimated in September, the incoming data suggests that that's actually going to be higher. And that's been the pattern. I mean, I would have little confidence that the forecast, if we made a forecast today, if we were doing an SEP today, you know, the pattern has been that one after another, they go up, and, you know, that'll end when it ends. But there's no sense that you know, that inflation is coming down. It just, if you look at I have a table of the last 12 months of 12-month readings, and there's really no pattern there. We're exactly where we were a year ago. So, okay.
Reacting
So
positively.
I would also say it's premature to discuss pausing, and it's not something that we're
There it
thinking
is.
about. That's really not a conversation to be had now. We have a ways to go. And the last thing I'll say is that
haven't said
I
anything,
would
but
want
the last
people to
thing I'll
understand
say-
our commitment to getting this done, and to not making the mistake of not doing enough, or the mistake of withdrawing our strong policy and doing that too soon. So I control those messages, and that's my job.
Everything you said this year has been backwards. So maybe that means they're gonna be
Edward
down,
Lawrence
actually.
with Fox Business. Thank you, Fed Chairman. So how big of a headwind is all the fiscal spending to what the Federal Reserve is trying to do to get inflation back to the 2% target?
You know, in theory, it was a headwind this year, but I do think the broader context is that you have households that have these significant amounts of savings and can keep spending. So I think those two things do tend to sort of counterbalance each other out. It appears consumer spending is still positive. It's at pretty modest growth levels. It's not shrinking, but people are, the banks that deal with retail customers and many retailers will tell you that the consumers are still buying, and they're still they're fine. So I don't know how big the fiscal headwinds are, and they haven't shown up in the way that we thought they would in restraining spending. So it must have to do with the savings that people have.
What about the spending? There's tens of billions yet to be spent. I mean, from the Inflation Reduction Act, the American Rescue Plan, CHIPS Act, bipartisan infrastructure bill. How does that play into your thinking about the future?
You know, it's demand is going to have some support from those savings, and also from the strong demand that's still in the labor market. We still see pretty significant demand and a tightening labor market in some respects, although I think overall I would say it's not really tightening or loosening. So we see those things, and what those things tell us is that, our job is going to require some resolve and some patience over time. We're going to have to stick with this. That's just we take all that as a given, but we know what our objective is, and we know what our tools can do. And
That's probably the last question.
That's how we think about it.
We'll go to Nancy for the last question.
Hi, Chair Powell. Nancy Marshall-Genzer from Marketplace. I'm wondering, has the window
Everyone's
for a
clearing their
soft
throat.
landing narrowed? Do you still think it's possible?
Has it narrowed? Yes.
I guess I'm not the only one sick.
Is it still possible? Yes. I think we've always said it was going to be difficult, but I think to the extent rates have to go higher and stay higher for longer, it becomes harder to see the path. It's narrowed. I would say the path has narrowed over the course of the last year, really. Hard to say. Again, I would say that the sort of array of data in the labor market is highly unusual, and to many economists, there is a path to. Ordinarily, there's a relationship to GDP going down and vacancies declining. translating into unemployment, or there's Okun's law. So all those things are relationships that are in the data, and they're very real. Data's a little bit different this time, though, because you have this tremendously high level of vacancies, and we think on a very steep part of the beverage curve. All I would say is that
beverage curve.
The job losses may turn out to be less than would be indicated by those traditional measures because job openings are so elevated and because the labor market is so strong. Again, that's going to be something we discover empirically. I think no one knows whether there's going to be a recession or not, and if so, how bad that recession would be. And our job is to restore price stability so that we can have a strong labor market that benefits all over time, and that's what we're going to do.
But just real quickly, why do you feel like the window has narrowed?
Because we haven't seen inflation coming down. The implication of inflation not coming down, and what we would expect by now to have seen is that as the supply side problems had resolved themselves, we would have expected goods inflation to come down by now, long since by now, and it really hasn't. Although it has come down, but it's not to the extent we had hoped. At the same time, now you see services inflation, core services inflation moving up, and I just think that the inflation picture has become more and more challenging over the course of this year, without question.
Ugly.
That means that we have to have policy be more restrictive, and that narrows the path to a soft landing, I would say. Thanks very much.
And he's done. I've answered no questions, and now I'm going to get up and leave. I've answered nothing. That was brutal. That was brutal. From the beginning, from the problems we had with the Fed stream. They need more funding, apparently. Maybe that's what they're talking about. Maybe why they're raising rates. Because their connection did not work. That was on them. That wasn't our stream. Thank you guys for saying open the YouTube stream, because that was flawless. It worked. I appreciate it. I was frazzled. But that was it. That was incredibly hawkish. We got 75, but man, at the beginning we said, it's really not about the interest rate change today. It's about the rhetoric and the future. And guys, I could not have really been any more hawkish. Like, he could have said, the only way it could have been more kind of doomy is if he was like, we're immediately going into a recession right now or something, which he didn't. But essentially, he said, a lot of this he said before, but the reason today was more impactful is because the markets and in general people have been expecting not today to see a softening or more dovish tone, but to see that moving forward. And what Powell essentially did, or essentially said and confirmed to us, is we don't see it. It's not here yet. We're going to continue what we're doing, aka 75 or higher BPS hikes, until those numbers come down. We don't have those numbers. What this means, in my opinion, is with that rhetoric, he's taken 50 BPS probably off the table in reality or in probability for next month. That's not a great sign. Markets, as we kind of glimpsed through, not very happy. Some guy said, like, oh, bonds and stuff are reacting positively. Unless he knew the future, because now it's kind of up from where it started. He was totally off. Stocks are absolutely in free fall. See, NASDAQ is very down. These were relatively kind of mild candles. We now have a hammer, kind of a very ugly bearish hammer on the US 100 right now. The hourly, incredibly bearish engulfed. Gold, look at this. This is why we say don't trade into these also. Look at this whipsaw, man, on gold. That was a 1 hour candle. It traded from 1640 to 1670, which isn't crazy in crypto, but that's pretty crazy in gold. Our descending trend here, I think, right? Descending trend? Ascending trend? I don't know. Nope. It was maybe just a drawing. Nasty wick on the top of candles really across the board for today. NASDAQ, DJI, I'm assuming looks the same. Yeah, like inverted hammer. Not great. Not great. We were really hoping not for him to say everything's fine and we're going to, we really weren't expecting him to moon markets today. But what we were hoping for was a little bit of that tone to come down, and it didn't happen. That is not great. That is absolutely not what I was hoping for. Though, I don't know. We're all hoping for different things, right? What I do think is great, yeah, look at the dollar blast off. Jeez. That bottom wick. That bottom wick, though. I think this heavily weighs. So this actually didn't move that much since we started, which is weird. Because it was essentially in this hammer formation when we started. It came down. Now it's back up. I see no reason. I see no reason for the dollar not to kind of continue this upward march. 121 was our target from I don't even know how months ago, or how many months ago, was our target on the Dixie. With the rhetoric we just heard, I mean, that's, again, our target, right? I mean, it already was. 120 measured move. It looks like, though, I mean, this daily candle really looks like it wants to break out. This is brutal. I'm going to expect upside on the dollar. I'm going to expect downside on everything else, right? Look at this hourly candle on the NASDAQ. Look at that. That's just savage AF. To be honest, Bitcoin holding up better than most markets. There's the dollar. There we go. Just broke the daily high. That is just a beast candle, man. That's a beast candle after that bottom wick. That's a lot of buying pressure. Market participants are bullish on the dollar again. Bitcoin, though, realistically is holding up a lot better than most of the markets. We looked at these before the stream. I mean, this is still pretty sideways on the S&P. Still pretty sideways on the DJI. Still pretty sideways on NASDAQ. But Bitcoin, if you zoom out and you look at this, it's really just in that symmetrical triangle still. It looks like it's had a fake breakdown, a fake break up. And what did we say? Wow, the beginning of the stream, I had so many predictions and like all of them came true. I said it wouldn't surprise me by the end of this meeting to see Bitcoin back in this symmetrical triangle. And where did it go? It's literally exactly back to that symmetrical triangle. Wow. Wow. Well, this is not really what I was hoping for today. Be realistic with you. Not what I was hoping for. But we don't always get what we want. Doge mimicking Bitcoin here. Same thing. Crypto seems relatively unfazed. This really isn't kind of abnormal volatility, especially for an FOMC meeting. I mean, we had that one whipsaw of price action, and like that's seemingly it. I want to say. And it's Wednesday. We have 2 more days of trading in the week. It's going to be hard to lean bullish. It's going to be hard. Maybe leaning bullish isn't the right choice, right? Wow, we almost gained 1,000 new subscribers today. Shout out Shmi King TTV, Curtis Chavez, Klopp, Daily Dose of Crypto, OJ, Bobby Rowe, The Real Guatama, Pirahan, Victor Hadash, Janos, Green Kobold, Rafa Buck, Samira Madhusakana, Zach Spady, 9914, Ray Rios, DJ Morgan, Summit, Shuka, some name I can't pronounce, 05 El Jose, Dini Raft Chanel, Dave Crew. There is so many. There's so many. I love you guys. Thank you for joining. I know you have a choice in your FOMC streaming, I don't know, sources, right? I know you have a choice. And we saw that. Literally, I pulled this up. Look at all these people. Look at all these people. I mean, shout out to them, right? Why wouldn't you? Why wouldn't you do it? I don't know. But I'm going to say this. We have been doing this here for over 2 years. We invented this as an event. We literally we invented this as an event. It's cool that there's so much interest in it. I'm totally fine with other people streaming it. I don't have any hard feelings or anything. It's cool that we've brought interest to an event that's so boring, right? Obviously, the world is more interested in what's going on here. It's just wild to see literally every account that I'm subscribed to is streaming it. But whatever, I get it. They see us popping off and they want a piece of that pie. Respect, I get it. Yeah, I don't know what other TA to do. It's like we're probably just gonna see downside. Will things hold their low? That's the question. You know, are we gonna hold the low of June? At this point, it's looking pretty likely. Looking likely. Time will tell. Will stocks hold their low? That I don't know. Stocks are much closer to their October lows. They broke low last month. Breaking low again this month, not crazy. Maybe reasonable. This is the Dow Jones. Look at how shitty this looks. This looks, I don't even know what this looks like. It looks like death. Oh yeah, I know you have a choice in who you watch, but I appreciate everyone joining us. We were the OGs, but I appreciate it. I hope you guys tune in next month for it, and tune in for just in general our streams here, right? We're live all the time, even not on FOMC days. Certainly never have had 5,000 people viewing. Look at this. I don't know if you saw this earlier. We had 5,100 people viewing this stream at 2 o'clock, right as the decision came out. 33,000 views already. This is wild. I love it, man. I love that you guys join. I was gonna sign off, but it kind of looks like there's gonna be more spice. Bitcoin's heading down. We have kind of two pivotal levels here from entering into the FOMC meeting. 20,140 was the swing low, and 2,800 the swing high. Bitcoin coming on down. Looks like it's kind of filling in some of that inefficient price action. You know what this really looks like to me, though? I wonder if anyone else is going to guess this before me. We do have the characteristics, and I just messed that up. We do have the characteristics of a diamond pattern. And I say this because of really just one thing. We had a swing low that immediately moved to a swing high that broke the range. After the swing high, you return to essentially what is the range. So fingers crossed that we don't get a lower low on the sell-off. There's really no reason to expect not to, as it sells off here. I mean, there's no real reason to expect not to, but it is possible. And even if it does sell off lower, then really what you get is just a diamond in the other direction. It's a swing high into a swing low, right? Diamond patterns, typically reversal, not continuation. The question is, though, what would this be, whether it's continuation or reversal? Because this is just sideways. So it's really would be neither. I guess you would, no, you can't even call it that way. I'm not really sure what a diamond would mean in the middle of a pattern. Like in the middle of this kind of jibberty-gook here. Let's see. 4 hours getting heavy. 6 hours ugly as all hell. 12 hours actually pretty gross. It was beautiful. Now it's kind of gross. Daily not super affected by this. Nah, shit, I don't think I can keep going. Oh, did you notice how everyone else was like coughing and sniffling and clearing their throat during that meeting? I noticed. Pepperidge Farm noticed. Oh, there we go. We have a lower low. We broke the FOMC meeting's low. That's some crazy volatility, though. Not huge price swings, but that's pretty crazy volatility, especially if you look to the left. Very little, no, nothing comparatively volatile. Let's actually pull up Bitcoin volatility. I'm curious. Oh man, my throat. Bitcoin volatility, moving up, moving on up. Not really out of the range of normalcy yet. We've definitely seen some falling going on. We don't need any of this. This is really old. This is a chart I made a long time ago. I still like the bands though. Kind of see like an upper and lower band of volatility. The lowest point in volatility was what? The end of 2018 being in 19. So I was down at 3,000. Price hadn't rallied yet. Highest volatility March 2020. So actually this is interesting because this shows us that volatility isn't necessarily biased to one side. We have very low price action at the end of 2018 with low volatility. Then we have March 2020 with very low price action, almost equivalent, with very high volatility. Doesn't really lean one direction or the other. May 2021, high volatility. That was probably right around that 65K high. And where's November 21? And then really, here's a 65K high, very mediocre volatility. Over the last few months, volatility has dropped. We've seen that weighing off. That happened here into July of 2020. That is when we sprung back up to an all-time high. Spicy. Not really much we can kind of pull out of that, though. Site tells me that we're going to keep moving today. Wow. It's actually broke out of that wedge this way. Let's see. It is technically still valid on the 4-hour. If the 4-hour gets bought up, then we can get back in that wedge. I don't know if I'm very hopeful for that, though. 4-hour looks ugly. Yeah, I have a feeling it's going to be pretty spicy. I just don't know if I can continue. We've been live for 2.5 hours and my throat is killing me. But we still have 2,000 viewers. Let me read what you guys are saying. BTC bearish and weekend. It's not quite the weekend, but off of that FOMC meeting, it's going to be hard to argue up for most things. Moonboy render token. What is render token? Again, what's the ticker? Tell me the ticker. I need to get some tea. I have tea downstairs. I have to go get it. If I take a 2-minute break, it'll go from like 2,000 views to 1,000 viewers, or like 500. It'll drop so fast if I get off the screen. RNDR. Something I don't like. I don't like this. This is seemingly another rejection from the 20 weekly. That's pretty bearish. That's pretty bearish, actually. Turn back music, yeah, good idea. Go to the next song. There we go. Guys, don't forget, we have plenty of likes. I appreciate the likes, but don't forget to subscribe. We've gained over 1,000 subscribers today during this live stream. We broke all of our records for concurrent viewers. We had 5,100 viewers today. Insane. This is going to be, I think, the most viewed stream we've ever done. And that was all because of you guys. You need to be distracted from your losses. All right, then maybe I can, for you guys, I think maybe I can try to keep going a little bit. I'll do as long as I can. I'll try. Thank you, Crypto Daniel. Well, I mean, it wasn't me, it was you guys. You guys are the reason we broke all of our records, not me. Oh, RNDR, right at resistance, bud. Chart's not bad. Right at monthly and weekly resistance. If RNDR can break 75 cents, close a candle above it though, it's looking pretty good. Not a lot of resistance above for RNDR. I don't know what this is. I don't own any. But not a lot of resistance above if it can close any candle. Just any candle. Above 75 cents. It's going for today. The higher high is nice. It's nice. But it's got to close. It's got to close. If you can break that, You have very little on the way up. Maybe a little, what, $1.20? But $2.25, that's a major resistance. That's where I'd be looking if you get a close above 75. That's a big gain. That's a big gain. Daily looks strong, actually. Interesting. This isn't a very smart play. So I could look at it, not financial advice. I don't give financial advice. By the way, shout out to our sponsors, Bybit, Market Cypher, and BingX. Check them out in the video description below. Check out all the links in the video description below. This might be how I'd scalp it if I was trying. Something like this, a little 3-to-1, going from those 74.4 and 72.6 levels. Probably get a little scalp, maybe back up to the 85-cent level. What I'd rather do, and I'm not as confident on this one, what I'd rather do, though, is play the longer game. Look for that 225. Now, this is probably smarter to be taken from down here if you get it. From that 56-ish. Then looking to play it up to 225. This would be the patient man's game. That's probably how I'd want to play it. But the impatient man maybe looks to just play a short-term bounce off of that previous resistance. Some kind of stops getting hit. I could see it. I could see it. Bitcoin, you're so droopy. Great show. Thank you, Marlo. Francisco Perez, follow me for more tips on how to drive yourself insane. I have not cable digital. I have not. XRP dot Wi-Fi. Render, I've never heard of it. Hard to believe it's hype. I'm not down, I'm just still sick. And also been streaming for almost 3 hours. I'm not down. Not what I wanted from the meeting today. But I don't know, man. If you've been in crypto the last year and you're a bull, you're probably pretty used to not getting what you want. So this is not a big deal. Not a big deal. Well, maybe short-term bounce there. I don't really want to look at a bunch of charts that are just going to be exactly the same as Bitcoin. Freaking soul right now. XRP is still just flagging. Nothing has changed. You have a vaguely Wyckoff pattern. You broke XRP. You had resistance. You vaguely Wyckoff pattern. You broke it. You back tested it as support. Now you're potentially in an SOS. A move below 41.8 cents in XRP kind of wrecks that. I mean, as long as it holds that, though, I think it's going to 61.8 cents, something like that. What dot? See, checking on dot. I hate these old charts. Crocodile. Not the right song. Dot's back at support. Back at $6.28. That's a macro support. It broke through. Actually, Dot, I said this last time. I was surprised. It's not looking bad. Dot higher low. Hit support. Bounced higher high. Hit support again. So this is going to be critical to hold $6.28. Critical. If you lose that, this chart looks wonky again. But why I like this, I can show you through a different chart the reason I like it. Cardano. Cardano, very similar setup, right? Very, very similar setup to DOT. You have this macro previous support. It's at 41.6 cents. You broke it, you fell lower. Cardano, though, got rejected. Got rejected. So you can see the difference here. Might have a lot of doodles. Might be hard. There you go. Dot, however, broke through, and that should have been resistance. It was tested as resistance once. Looks like it's testing it as support. That's why I say if you lose it, this sucks. If you don't, it looks great, because really it's what I was hoping ADA would do. But ADA seems to be struggling. I had a trade little setup here. I said, I don't think this is a good one. I wouldn't take it. But, yeah, I don't know if I'll get rid of it. I'm not hiding it. It's just like in the way. I did say I wouldn't take it. As long as your lows are coming up, you're okay on ADA too. All right. Ugh, my God. Yeah, boys. I would love to. I want to stay on live, but it's like 3 hours in. Yeah, I don't know if I can do it. I want to. We have so many people viewing. I don't want to leave. So many people. Make sure you follow me on Twitter. Join the Discord. We're gonna do an extra big airdrop because we broke a record today. All you have to do is join the Discord and you'll be part of the airdrop. You'll get some free sats. I'll make you a holder. Make sure you've liked and subscribed, enabled the bell. You have to enable notifications on your device as well for that to work. Check out our sponsors, links in the video description below. Try BingX. Honestly, I have been trading on BingX and I really like it. I have noticed, unlike any other exchange I've ever used, I don't get hunted if I put a stop close to price. It doesn't instantly go there and stop me out. I've been enjoying it. I've never traded on them until they sponsored us, and it's been going well. So hopefully there's all links. Just use all the links in the video description to help support the channel. This has been awesome. I love you guys. We'll be live again soon, probably tomorrow or the next day. And of course, we'll be live December 14th for the next FOMC meeting. 5,000 is going to be a lot of viewers to try to break, but let's try to do it next month. I love you guys. Crown out.